In part 2, directly we can start with the new chapter. The chapter name is Exempted Incomes. What is the new chapter name? Exempted Incomes. Why we need to discuss the Exempted Incomes chapter? So first, why we need to discuss the Exempted Incomes chapter? Because I think you know in your ICMA I study material, you have one chapter called as an agricultural income. You can verify ma. What is the chapter name ma? Agricultural income. Every attempt we can get the 4 to 8 marks from this chapter. So this is a small chapter and we can get the 4 to 8 marks from this chapter. Every attempt we can get 4 to 8 marks, sir. Fixed weightage. So that's why we will discuss that agricultural income also in this exempted incomes chapter. Okay. Shall we start the discussion ma? Yes. Please remember this is a 4 to 8 marks chapter, less than 1 hour. Nearly 30 to 45 minutes we can complete the entire chapter along with the problems also. Shall we ma? Yes. First of all, before going to this chapter, I want to give you the basic differences between the exempted incomes as well as what ma chapter 6A deductions. Yes. So if you are observing that exemption means nothing but what ma, it should not be forming part of the total income of an SSC. Exempted means on that we are paying the tax, we are not required to pay the tax, we are not required to pay the tax. That's why it shall not be included in the total income of the SSC. Second one, chapter 6A deduction, sir, we can get 4 marks also from this. Just the differences between exempted incomes, the differences between the chapter 6A deduction also we can get. So that's why important. Always, what do you mean by the chapter 6A deductions ma? Remember, first it is an included in the gross total income. After that, we are reducing it from the gross total income in order to arrive the what ma? Net total income. Can you give me one example ma? Yes. I think you know section 80 TTA. 80 TTA. What is it 80 TTA? Deduction with respect to interest on savings bank account. The first of all, it is an included in the income from other sources. That interest amount is an included in the income from other sources. Then after, in order to arrive the net total income, we can reduce it from the what ma chapter? In order to arrive the net total income, we can reduce it from the what ma gross total income. This is only called as what ma chapter 6A reduction. Yes ma, very very important. One example ma agricultural income related section 10 subsection 1. Agricultural income is nothing but what ma exempt under section 10 subsection 1. It is also another one. So you need to know about it. Yes. If you are observing that 80 TTA related deduction related interest included in the where ma gross total income, from that we can reduce it what ma deduction. That is in what ma one example 80 TTA. I think you know how much amount of the deduction you can get under section 80 TTA ma 10,000 or actual interest whichever is lower. Why we are reducing it from the gross total income ma in order to arrive the what ma net total income. Are you clear ma up to now? Yes. Yes. If it was clear, then I need to start with the what ma next concept in this chapter. Just introduction is one of the basic differences between the deduction and exemption. You can get definitely yes ma differences between the exemptions and the deductions. You can get for the 4 to 5 marks. Next, first exempted income ma section 10 subsection 1. What is that first exempted income ma section 10 subsection 1. Agricultural income is an exempt from the tax. All the students will know this point very very easily. But please remember, if any agricultural income in India, that is only exempt ma. If any income as ma agricultural income in India, that is only what ma exempt. Can you tell me, sir, in India, one non-resident is there. He having the agricultural income, that is also exempt. In India, one resident having that agricultural income, that is also exempt. That means whether you are a resident or non-resident, these are all the things are irrelevant. If you have an agricultural income in India, that is directly what ma exempt. That is directly what ma exempt. Please remember. So sometimes they can give that question. Yes ma, in Tamil Nadu, one non-resident is arriving one agricultural income, exempt or taxable ma? Exempt only. First of all, we need to check whether it is an Indian agricultural income or not. That's only the relevant point. Whether yes ma, earning person is a resident or non-resident, it is totally irrelevant. Okay. If any agricultural income is an earning outside India, suppose yes ma, in Pakistan, one resident person, that means what ma, resident and ordinary resident is arriving the yes ma, is earning the some income from the outside India, that agricultural income, that is taxable only, because it is a foreign agricultural income. Simply we can say it is what ma, foreign agricultural income. That's why this is definitely taxable. Under which head of income ma? Income from other sources. It is taxable under income from other sources. Are you clear up to now? Sir, then what about the non-resident ma? Not taxable, because this is a foreign income. For non-resident it is not taxable. For resident only it is taxable. Under which head of income ma? Income from other sources. Please remember this point. Many students are confusing in these also. So if any foreign agricultural income is there, that is taxable under income from other sources for resident only. If any foreign agricultural income is there for non-resident, that is what ma, not taxable. Okay. Next, very very important concept. Listen. Mr. A only have an agricultural income ma. He don't have any other income. Only have an agricultural income. So please tell me, what is the tax treatment ma? That agricultural income is completely exempt, because that agricultural income generated in India, that is an Indian agricultural income. That's why it is an exempt under section 10 subsection 1. It is an exempt under section what ma? 10 subsection 1. In case Mr. B have an agricultural income along with having what ma? Non-agricultural income also. You have an agricultural income as well as what ma? Non-agricultural income. Then he has to find out the tax on non-agricultural income by using the aggregation method or partial aggregation method or integration method or partial integration method. Any one also okay. In an examination, maybe they can give us it as an what ma? Aggregation method or partial aggregation method, integration method or partial integration method. Anyway they can give you. So please remember, if any person have an only agricultural income, exempt. If any person having that agricultural income along with the non-agricultural income, we need to find out the tax by using the partial aggregation method or aggregation method or integration method or partial integration method. So I think we need to discuss about the what ma? How to find out the tax by using that what ma? Partial aggregation method. Shall we start ma? Yes. When we have to apply the partial aggregation method, that is only the question. Please remember, first one, if any person having agricultural income is on more than 5,000 per annum. Yes ma. Second one, if that person having the non-agricultural income more than basic exemption limit. If these two conditions are satisfied, then only we need to apply the partial aggregation method or aggregation method, integration method or partial integration method. So please remember, what is the applicability ma? Not in all cases. If these two conditions are satisfied, then only we have to calculate the tax liability by using that what ma? Partial aggregation method. What are the two conditions ma? Please let me know. First one, agricultural income more than 5,000 per annum. Second one, non-agricultural income more than basic exemption limit. Then only we have to apply the what ma? Partial aggregation method. Okay. Just for an example, Mr. A having the 59 years of age ma, he having the agricultural income 4,000 per annum, non-agricultural income 3,60,000. Yes ma. Here partial aggregation method is an applicable or not applicable? Not applicable. What is the reason? Because agricultural income is less than 5,000 only. If that agricultural income more than 5,000, definitely we can apply the what ma partial aggregation method. But here non-agricultural income is more than basic exemption limit. Can you tell me what is that basic exemption limit for the person who having the 59 years of age ma? 2,50,000. Non-agricultural income is more than 2,50,000, but agricultural income less than what ma? 5 lakh, that's why, sorry, 5,000, that's why partial aggregation method is not applicable here. Next case ma, Mr. B, 89 years SSC ma, can you tell me 89 years SSC, what is that basic exemption limit? Please type your answer. So please try to type your answer. Yes ma, basic exemption limit is on how much ma? 5 lakh. Please remember 5 lakh, 5 lakh, yes. Agricultural income is nothing but here 5,500, more than 5,000 satisfied. Non-agricultural income also more than basic exemption limit. Definitely here we have to apply the yes ma partial aggregation method. Here we have to apply the what ma partial aggregation method. Are you clear? Yes. Next, please check it out my point. If any incomes are taxable at flat rates, can you tell me, yes ma, following persons needs to pay the tax by using the flat rates. Can you tell me who are that persons? The first one, company, partnership firm. Some SSEs are required to pay the tax by using that what ma flat rates only. And okay, I am an individual. I have only the capital gain income. I am an individual. I have only capital gain income. Can you tell me I need to pay the tax by using that what ma special tax rate? So in my case, there is no use of basic exemption limit. That's why if any person having that what ma income, so only taxable in the flat rates, for that persons also, yes ma, partial aggregation method is not applicable. Please remember, this is a very, very important point. Company, there is no concept of partial aggregation method. Yes ma, partnership firm, there is no concept of partial aggregation. And I am an individual. I have only that special tax rate taxable incomes like capital gain incomes, like yes ma, winnings, gamblings, casual incomes. In my case also, there is no applicability of partial aggregation because in my case, there is no basic exemption limit. Yes ma. What is that point ma? Partial aggregation method is not applicable in this case. If any person having that only special tax rate taxable incomes and for company and for partnership firm, yes ma, partial aggregation method is not applicable. Are you clear? Yes. Okay sir. Yes ma, if partial aggregation method is unapplicable, how to find out the tax liability? How to find out the what ma? Tax liability. Shall we start ma? Yes. Shall we start ma? Yes. First, in step 1, please calculate the tax on agricultural income plus what ma? Non-agricultural income. So please combine the agricultural income as well as what ma? Non-agricultural income and please compute the tax on it. Please compute the what ma? Tax on it. Next, step 2. Step 2, please calculate the agricultural income plus basic exemption limit. I think you know some person having the basic exemption limit of 2,50,000, 3 lakh, 5 lakh, and please aggregate that what ma agricultural income plus basic exemption limit and please calculate the tax on it. First step, we have to calculate the tax on agricultural income plus non-agricultural income. Second step, we have to calculate the tax on agricultural income plus basic exemption limit. So in step 3, that is a very, very easy point ma. Step 3, please calculate the difference between the first 2 steps. Please calculate the difference between that what ma? For first 2 steps. Step 1 minus step 2. For this, we have to add the surcharge. If your income is more than basic limits for surcharge, you have to add that what ma? Surcharge. Some cases maybe you can get the rebate. That's why or ma. Some cases maybe you have to add the surcharge. Some cases maybe you have to reduce that what ma? Rebate. Whatever it may be. Any one only possible. Either surcharge or rebate. Please apply that things. Finally, you have to add the what ma? Health and education cess. I think you know in the basic concepts chapter itself, what is the last step in tax computation ma? Health and education cess addition. Yes, are you clear ma up to now? Very, 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 very important model. Definitely you can get this model in your examination. Sir, if you want to know about the capital gain, please wait. I am already in the discussion of one chapter. Okay. If you want to check it out, whether the capital gain is covered or salaries are covered after the completion of live session, I will give you the timestamps. Okay. Then you can check it out. Okay. So because we are already in the middle of the discussion, if you are giving the continuously messages also, no use, sir. Okay. After the completion, because we don't know, I haven't regular batch students also, already BCCS students also participating in this session. So because okay, you know, you want to get only capital gains chapter after the completion of the live session, I will provide the timestamps around that time. Yes, you can check it out. Okay, capital gains must and should we can cover. Okay, yes. So please participate in the discussion. Ma today marathon worth nearly 45 to 50 marks. 45 to 50 marks marathon session worth. Already first part we are covered nearly, that is also 40 to 40 marks weightage. Around 40 marks weightage. Okay. So 40 marks means nothing but I am saying it is on 100 marks. That means a percentage only. Yes, ma. Clear ma up to now? So in the percentages point of view, I am saying ma, definitely if you are observing part 2 and part 1, both the marathons, definitely you will get 40 plus marks. So I am saying the totally paper nearly for that 58 marks. I think we haven't 58 marks or 57 marks related paper. From that definitely you can get 40 marks. Okay. Just listen. Yes. Next, meaning of an agricultural income, definitely you need to know. Meaning of agricultural income, definitely we need to know. Yes. So meaning of an agricultural income, very, very important. First reason, if you are receiving the rent from agricultural land. So nothing but, yes ma, in my case, I have an agricultural land. I'm given this agricultural land on rental basis to other person. I'm receiving the rental income from this agricultural land. That is also agricultural income plus. But remember that agricultural land must be used for that agriculture purpose. Yes, ma. I have some lands in my own village. I am given to that what ma, some agriculturalist. They are cultivating in that land. They are cultivating the crops in that land. So that's why if any rent is received from the land, that is an agricultural income. Okay. Second case, I am given the my agricultural land for the purpose of movie shootings. Here I am receiving the rent. That is not an agricultural income. That is not an agricultural income. Remember, if you are receiving that any rent from that agricultural land, that is an agricultural income, provided if that isn't used for that what ma agriculture purpose. B point. If you are selling any agriculture produce, I am cultivating the mirchi, I am cultivating the mangoes from my agricultural land. If I am selling the agriculture produce, if I am getting that any income, that is treated as what my agricultural income only. Next C point. Sir, I haven't some farmhouse or any building in my agricultural land ma. So if any rent receiving from that agricultural land related agricultural income, if any amount is received with respect to that what ma farmhouse or building, that is also agricultural income, provided if that isn't used as a dwelling. Dwelling means nothing but what ma, yes ma, staying. That means what ma, staying purpose or residential purpose. Or if that isn't used for the storage purpose also. Yes ma, if any rental income received from the farmhouse or building situated in that agricultural land, yes ma, that is treated as on what ma, agricultural income only if that isn't used for that yes ma, residential purpose or storage of house. If any income received from the nursery income also treated as on what ma, agricultural income only. If any nursery income received also, if yes ma, that is also treated as what ma, agricultural income. This isn't based on one case law ma, just we will discuss that case law. Yes, I think many of the students are know this case law, Soundarya nursery case law. Yes ma, this is nothing but yes ma, happened in Chennai. Remember, if you want to do that agricultural activities, definitely you have to do some basic operations on land ma. What are the basic operations? Yes, you have to, yes ma, you have to do that what ma, seeding, sapling as well as growing activities must be conducted on land. So definitely the first of all you have to do that what ma, yes ma, land related activities. After that we have to do that what ma, seeding. After watering, sapling, all the things must be conducting on the land. But in case of the nurseries, in case of nurseries, can you tell me that basic operations definitely on the flower vases, and if you are observing on packets or covers, on that only they are doing these type of activities. So assessing officer means department is treated as a non-agricultural income because you are, yes ma, doing the basic operations not on land. But if you are observing, if you are in your farm, in your agricultural lands, all the operations are on what ma, land only. But in nurseries, if you are observing, they are, yes ma, growing the plants as well as what ma, yes ma, whatever it may be, that all the things on what ma, tries as well as the flower vases as well as in the packets. So that's why assessing officer wants to be treat it as a non-agricultural income, but SSC will treat it as an what ma, agricultural income. So can you tell me, yes ma, they both the persons having the dispute, that's why they are going to the what, they are already, yes ma, appeared before the Madras High Court. Madras High Court is given the judgment favorable to that SSC. Yes ma, whether, yes ma, basic operations are carrying out on the land or not on the land, that is an irrelevant. If growing activity is there, it itself can be treated as what ma, agricultural income. Please remember, yes ma, whenever you have an growing activities, that itself can be treated as what ma, agricultural income. Based on this case law, we are updated the agricultural income definition. What is that ma? Income from nurseries, whatever it may be there, that is also treated as what ma, agricultural income. Can you tell me what is that? Yes ma, case law involved in here ma, Soundarya nursery case law. Whether you are conducting the basic operations on the land or not on the land, also no issue. Always we are treated this as an what ma, agricultural income only. Clear? Very, very important. What do you mean by the agricultural income? Rent received from the agricultural land, provided if it is used for agriculture purpose. Income from sale of agriculture produce. Rent from the farmhouse, if it is used as a dwelling house, storage house. Income from the nursery. Always, this is only the agricultural income. Definition is nothing but what ma, section 2, subsection 1A. Next. Problem asking area, composite activity. Problem asking area, composite activity. Shall we take one example ma? Navaneet, Bharat, all of you, shall we take the composite activity part ma? Yes. Mr. X, yes ma, Mr. X selling the coffee in market. Mr. X selling the coffee as a final product in that market for how much amount ma? 20 lakh. While, yes ma, while he producing the coffee powder, he has to do the following activities. First activity is nothing but growing, cured, roasted, grounded. So that means first of all we need to grow that what more coffee trees. From that we have to extract that what more coffee seeds. After that we want to give that what more roasting, and after that we have to do that what more powdering and grounded. All the things we have to do. Then only we can sell that what more coffee powder to that outsiders as a final product. Okay. In these things, definitely growing is treated as what ma, agricultural activities. So further all the activities are treated as what ma, business activity. That means if you are observing, if you want to sell the coffee powder to that outsiders, in this we have one activity is an agricultural activity, some other activities are treated as what ma, manufacturing activities, or nothing but that is only called as what ma, business activities. How to calculate that income ma? Yes, so please calculate the income from the sale of final product. What is that income? We are getting that final product selling related 20 lakh. From that, please reduce the expenses for growing. From that, please reduce the expenses for the business activities. That means growing activity related expenses 5 lakh and business activity related expenses how much 10 lakh. Please reduce it. Can you tell me how much finally you are getting that profit 5 lakh profit. Definitely in this situation, yes department treat this ultimate profit of 5 lakh is treated as what non-agricultural income, but SSC always treat this as an what agricultural income, because if that is an agricultural income exempt from the tax, no need to pay the tax. Definitely there is a dispute between these two persons, department and SSC. Can you tell me what we need to do here? What we need to do here Any idea? What we need to do here Any idea from? Yes, here department already given this some rules related clarification. If any composite activity related income is there, so please calculate the ultimate profit from the all the activities. What is that ultimate profit 5 lakh? That should be apportioned in the following rates. Income tax rules related, they are given the clarification please observe. Yes this is only the third point we have to discuss here. The first of all, yes what is the thing if growing, yes growing, cured, roasted, grounded of coffee is there, ultimate profit, out of that ultimate profit 60% is nothing but what agricultural income, 40% is nothing but what non-agricultural income. So please apportion that amount 60% is an agriculture, 40% is non-agriculture. Yes 3 lakhs as well as what 2 lakhs. 3 lakhs as well as what 2 lakhs. Please observe. Yes growing and cured, roasted, grounded is there. Yes if any related activities are there, out of that ultimate profit 60% is an agricultural income, 40% is non-agricultural income. Like this only two activities are there, growing as well as the cured. Here the percentages are changed, 75 as well as what 25. Sir, like this, I am discussing only related to coffee If any tea related is there, yes manufacturing and growing of tea is there, 60-40 ratio. So please remember these rates definitely it will create the big impact in that examination. Next, manufacturing of rubber as well as growing of rubber is there. Yes here 65 as well as what 35%. But always please remember, students are remembering these percentages, but in an examination they forget to remember what is that percentage related to agriculture, what is that percentage related to business. Please remember, higher rates always related to agriculture. 60-40, 70-30, 75-35, yes 65-35, these are all the rates. Yes whatever that highest proportion is there, that highest proportion always related to what agricultural income. Very very important rates we have on only in our syllabus. These four related composite activity related classification So what are that tea. Yes next coffee, first one ground and cured, next one ground, cured, roasted and grounded, last one manufacturing and growing of what rubber. These are only the four activities related only we have in our syllabus. Please remember that percentages. Are you clear up to now? Next one important, just listen carefully. Sir, if the partners are there, they are investing in that partnership firm, but that partnership firm is doing that what agricultural activities. Yes partnership firm is doing that what agricultural activities. Yes, if any profit arising from the, if any profits are arising from the agricultural income, yes agricultural activities, that isn't distributed to whom partners. Can you tell me, from the partnership firm partners can receive the following benefits. What are the following benefits profits or interest on capital. Yes profits from the partnership firm. Second, if you are working in that partnership firm, you can get the remuneration. Yes some cases you can get the interest on capital also. Whatever the benefits are received by the partners from the partnership firm, whatever the benefits are received by the partners from the partnership firm. Here the partnership firm is involving in the agricultural activities. Partnership firm is involving in the agricultural activities. Yes, ma. In this situation, that is always treated as what, ma? Agricultural income. That is always treated as what, ma? Agricultural income. Please remember, because we are indirectly investing in that partnership firm, we are only doing that agricultural related activities. That's why whatever that amount is received from the partnership firm to that partners, in the hands of partners, that income always treated as what, ma? Agricultural income. Second one, shareholders are investing in where, ma? Company. Shareholders are investing in company. Company is doing that agricultural activities. Whatever the dividend is paid by the company to the shareholders, that is not treated as agricultural income. Please remember, this is a dividend. Dividend always taxable under the head income from other sources. Because just you are investing, always you should remember the company and the shareholders are always separate. You are an owner only, just, but they are doing that multiple activities. One of that activities in agriculture, whatever that amount is and receiving it as a dividend from the company, even though the company is doing that agricultural activities, from that agricultural activities income only they are paying the dividend also. Shareholders related dividend amount is an always taxable under the head what, ma? Income from other sources. Clear up to now? Okay. 10 subsection 1 just over. What is the 10 subsection 1 content, ma? Just quickly I will revise these things, ma. If any income is an arises from the India, that is an agricultural income, is an exempt in the hands of resident as well as non-resident also. Foreign agricultural income is taxable in the hands of resident. Yes, ma. If any person having that agricultural income as well as non-agricultural income, we have to calculate the tax by using the partial aggregation method or aggregation method or integration method or partial integration method. When we have to apply the partial aggregation method, ma, if an agricultural income is more than 5,000, if that non-agricultural income is more than basic exemption limit, then we have to find out the tax by using that what, ma? Partial aggregation method. Please remember, if any person having that incomes are taxable only with the special tax rates as well as flat rates, for that person partial aggregation method is not applicable. How to calculate the tax by using the partial aggregation method, ma? Please remember steps we have. Step 1, we have to calculate the tax on agricultural income plus non-agricultural income. Step 2, we have to calculate the tax on agricultural income plus basic exemption limit. Step 3, we have to calculate the difference between the yes, ma, agricultural income first step 1 and step 2. Then we have to add that we have to add the surcharge if applicable, or we have to reduce the rebate if applicable. Finally, we have to add the yes, ma, health and education cess. Next, we have to define the agricultural income definition, ma. Section 2 subsection 1A is defining the agricultural income. Rent receiving from the agricultural land, if that land isn't used for agriculture purpose. If any sale of agriculture produce is that income also treated as an agricultural income. Rent receiving from the farmhouse, if that farmhouse is used for the residential purpose or dwelling purpose as well as storehouse also. If any income receiving from the nursery based on Soundarya nursery's case law, yes, ma, that is also treated as an agricultural income only. If any composite activities are involving in that what, ma, selling of final produce, please calculate the just ordinary profits from the entire activities. That ordinary profit should be classified based on that what, ma, following proportion. Can you tell me tea? 60-40. Yes, ma. Growing and cured coffee 75-25. Growing, cured, roasted, grounded 60-40. Rubber 65-35. Highest rates are always related to what, ma? Agricultural income. If any partners are receiving that income from the partnership firm, a partnership firm is an involving in that agricultural activities, that income also treated as an agricultural income in the hands of whom, partners. If shareholders are investing in that company, company is involving in that agricultural activities, out of that agricultural activities related income, if they are paying the dividend, that should be treated as a dividend only in the hands of shareholders. It isn't taxable under the head income from other sources. Are you clear, ma, up to now? All of you. So if you are giving the reply, then only I am also motivating to deliver that what, ma, all the things in a quick manner. So if you are maintaining the silence, that means okay. So okay. On that time, definitely that isn't demotivating for me also. If you are understood, yes, you can give me reply. If you are having any doubts also, you can ask with me also. No issue. Yes, ma. Next. Next, exempted incomes related section 10 subsection 7. Next, exempted incomes related section 10 subsection 7. Remember. Important, remember. Yes. Mr. X is an Indian citizen. He is working in an embassy. That is nothing but what ma, he is working in an USA, in an Indian embassy. So nothing but he is a government employee only. So he is working in where ma? USA, in an Indian embassy. That means he is a definitely government employee. So remember, if any Indian citizen working as an government employee in outside India, not in India. So can you tell me place of work is nothing but what ma? Outside India, but he is a government employee. Yes ma, he is an Indian citizen. These two things you should remember. These three things you should remember. He is an Indian citizen. He is a government employee working in outside India. Definitely he can receive the following salaries related, following amount as a salary. So I think if you remember the salaries chapter, yes ma, salary is salary means nothing but these are all the following components we should include. Basic salary, perquisite, allowances, retirement benefits, welfare contributions. Definitely these are all the things should received from where, from whom Indian government, because he is a government employee. So these are all the components. If you are included or added, then only we can call it as an what mass salary. Please remember, because he isn't doing the job in outside India on behalf of an Indian government, so that's why they are given one exemption. What is that exemption, ma? If any perquisites or allowances received from Indian government, that perquisite and allowances only exempt, ma. Remaining all the components are taxable. Only what are the two things are exempt, ma? Perquisite and allowances only exempt. Remaining all the components are what ma? Taxable. Please remember, very, very, very important. If any Indian citizen is working in an outside India as a government employee, he can receive the salary from Indian government. Whatever the salary received, out of that salary, perquisite and allowances are exempt. Remaining things only what ma? Taxable. Are you clear, ma? Yes, ma. Are you clear, ma? Next. Section 10, 10 CC. Yes, ma. What is the section 10, subsection 10 CC? Tax paid on non-monetary perquisites. What is that, ma? Tax paid on non-monetary perquisite. Can you tell me what is a non-monetary perquisite, ma? Employer isn't giving the bike to employee. That is a benefit. Non-monetary, not in cash. Just he is giving the one thing. That is a bike. Non-monetary perquisite. Yes, ma. Tax. Yes, ma. Paid by whom? Employer. On behalf of whom? Employee. So employer can give the salary in the form of, yes ma, non-monetary perquisites. Yes, he can give. But that is not a matter here. Yes, what is that expenses here, ma? Tax. So can you tell me whose obligation needs to pay the tax on the non-monetary perquisite? Employee obligation. But that obligation fulfilled by whom? Employer. Yes. Please check it out. Employer. Who is an employer here, ma? Yes. For an employer, definitely this is an expenditure, because yes ma, employer is paid the tax on the non-monetary perquisite. In this situation, yes ma, that is not your expenditure. Why you are incurring? That's why there is no deduction with respect to these expenses in business or profession. In business or profession, you can't take this expenditure as a deduction. Remember, this is not your obligation. Just out of your curiosity only, you are paid the tax. That is not your obligation. So that's why we are not giving any deduction in your business or profession. Next. For an employee, definitely it is an income. Yes, ma, tax needs to be paid by the employee only, but employer paid. That's why whatever that amount of the tax paid by that employer, this is an income to whom? Employee. Income to employee. But this income is not taxable. That income is exempt under section 10 subsection 10 CC. Can you tell me for whom this exemption is applicable, ma? Employee only. Employee only. Employee can take this amount as an exempt under section 10 subsection CC. Next, one of the most important concept in the entire exempted income, section 10 AA, we can call it as an what, special economic zone related deduction or exemption. Special economic zone related exemption as well as deduction. So I think you know, yes ma, in India, some localities are classified as an what, special economic zone. So whenever we have an what, underdeveloped areas are there, the government is classified that underdeveloped areas as an what, special economic zones. Yes ma, SEZ, we can call in the shortcuts as an what, SEZ, or we can call it as an what, tax haven jurisdiction, because no need to pay the tax on that profits and in this area. That's why tax haven jurisdiction. Remaining areas other than this, yes ma, special economic zone, we can call it as an what, domestic tariff area. Other than that areas, we can call it as an what, domestic tariff area. So please remember, if any SSC having the, yes ma, business unit in SEZ, if any SSC having that what, business unit in SEZ, that a person engaged in the manufacturing or production of any goods or articles or things or development of what, computer software, for whom this exemption will be or deduction will be applicable, ma? Yes, if any person having the business unit in which locality, ma? SEZ, and he is engaged in the production or manufacturing or development of any computer software, for that person we can give the exemption or deduction under section 10 AA. Yes, if you are observing that 1 to first 5 years, that means yes ma, you are started the business within first year to fifth year, we can take the 100% of export profits as an exemption. 100% of export profits as an what, ma? Exemption. Yes. Next 5 to 10 years, you can get the 50% of export profits as an what, ma? Exemption. Next 10 to 15 years, ma? In 10 to 15 years, yes, you can get the exemption. First one, ma, 50% of export profit or amount invested in SEZ reinvestment allowance reserve. That means, yes, I need to open one bank account. In that bank account, I need to invest some amount. Yes, ma, for what purpose, ma? Definitely that amount also reinvested in SEZ area only. If you are maintaining any SEZ reinvestment reserve allowance, please compare those two things. Yes, ma, whichever is lower is nothing but what, ma? Exempt. So how many years benefit we can get from this? Yes ma, section 10 AA, ma, 15 years. First 5 years 100% of export profit. Next 5 to 10 years 50% of export profit. 10 to 15 years 50% of export profit or amount invested in SEZ reinvestment allowance reserve, whichever is what, ma? Lower. So please remember, only they are providing that exemption for export profit, not for total profit. Please remember this. Here we need to know about the what do you mean by the export profit. What do you mean by the export profit? Yes. Please remember, definitely they will give you that what, ma? Total turnover. Can you tell me total turnover is 150 crores. So out of that, what is the domestic turnover, export turnover also they are given. If you are added these two things, then you can get the what, ma? Total turnover. So in every examination, definitely they will give you that what, ma? Total turnover. Out of that, yes ma, how much amount is related to domestic turnover, how much amount is related to export turnover also they are given. Total profit also they will give you. Can you tell me the total profit is related to what, ma? Total turnover. Total profit is related to total turnover. But here you have to calculate that what, ma? What is the profit related to export turnover? That is only called as what, ma? Export profit. So we haven't some normally, for better presentation, we have to, yes ma, formulate one formula. Export profit is an equal to total profit into export turnover divided by total turnover. In this situation, what is the total profit, ma? 25 lakh. What is that export turnover, ma? Yes ma, 100 crores divided by total turnover how much ma? 150. So please calculate 16.66 lakhs. 16.66 lakhs you will get. Yes, simply here we are applying that what ma? Cross multiplication only. So definitely in an examination they will give you that all these data. But they are given that one more data right now SEZ in that 1 to 5 years related slot ma. Can you tell me how much amount ma? 100 percentage of what ma? Yes ma, export profit is exempt. Can you tell me what is that export profit we are calculated? 16.66 lakhs. What is that ma? 16.66 lakhs. So that's why what is the total income you have in this question ma? Total income you have 25 lakh. From that 25 lakh we can get the exemption under section 10 AA. What is that amount you can get it as an exemption ma? 16.66 lakhs. On that we can get that what ma? 100%. If you are taken that exemption under section 10 AA, the finally you will get the yes ma 8.33 lakhs. On that we are required to pay the tax. Definitely this is an MCQ or 4 mark important question. Yes ma, first 5 years what is that profit you can get the exempt export profit 100%. Next 5 years 50%. Next 5 years 50% or reserve amount whichever is lower, and they are not directly give you in that examination as an export profit. They will give you this data. From this you have to calculate that export profit. From that you can get that what ma? Exemption. Are you clear? Just in our notes, yes ma, just for your information purpose only, for your information purpose only I gave the what ma? Just for your information purpose only I gave that what ma? Definition of export turnover, definition of what ma? Total turnover. Just to go through it, no need to by heart these things ma. Just if possible go through it, otherwise yes you can ignore also, no issue. Yes ma, just for your information purpose only I gave that what ma? Meaning of the total turnover as well as what ma? Export turnover. If possible just refer, otherwise you can ignore. And next you have to open the workbook ma. What is the chapter name ma? Exempted incomes. So if you are open the exempted incomes chapter, whatever the question number 4 is there, it is a very important question ma. Whatever that question number 4 is there, definitely that is a very important. This is directly copied from the study material ma. This is directly copied from the study material. Yes, this question definitely important. Following activities related income. If you are observing that we have a question number A to question number P. Out of that we have to write whether it is an agricultural income or non-agricultural income. Yes ma. Nandini Reddy, you are asking one question ma. What is that? Sir, why we are calling it as an export profit? Because yes, from these SEZ to DTA, that means domestic tariff area. Suppose near Chennai we have an SEZ ma. From that SEZ, if you are selling any goods to yes ma, India also, that means or not outside India, India also, that is called as an export only. So that means suppose if it is a Chennai, so Chennai is nothing but what ma? Locality of SEZ. If you are selling any goods from the outside India also, that is treated as an export. Because for the domestic consumption they are not giving any exemption. If you are doing that selling or any export activities, so then only you are taking that money from outside area to that SEZ area, then only that can be developed. That's why they are giving the exemption only on export profit, not on the domestic profit. So nothing but within the Chennai they are selling any goods. On that there is no exemption. If you are selling any goods from the SEZ area to any other area, that is maybe within India or outside India, that is called as an export. On that export profit only they are giving exemption. Yes. Next, this is a very important question. Maybe some students may not believe. What is the reason, sir? Why it is an important? This is an yes, ma'am. I will show you some questions. I will show you some questions. I will show you some past examination questions, ma. So all of you please check it out ma. This is a question number. State which of the following would be agricultural income or otherwise. They are given this question for 8 marks. They are given this question for how many marks ma? 8 marks. So how they are framed this question? Simply from the study material we have one question. From these only they are picking the just 8 points. From that 8 points, yes ma, every point is an 1 mark question. Directly they are given 8 marks. So that's why this chapter is an important. And next, this is a last attempt related MTP ma. Last attempt related MTP. So MTP means I think all of you know mock test paper, definitely important. So can you give me answer for this question? Can you give me answer for this question ma? All of you please give me answer for this question. 2 marks MCQ. So please tell me that answer. Yes ma. Pallavi is manufacturing the what ma? Tea. Profit is nothing but what ma? 12 lakh. So T is there. What is that percentage of an agricultural income? Please compute. What is that agricultural income percentage? 60%. That means every attempt we can get one question as an MCQ also from this chapter. And I want to open the few more MTPs ma. Few more MTPs. So that is only I am saying no need to prepare that MCQ separately. Always we can get that what ma? Yes, one more MCQ I will show you. Yes ma. So please check it out the question number 1 and tell me that answer. All of you please check it out the question number 1 and tell me that answer. This is also MTP ma. This is also MTP. Last attempt related MTP. Please tell me that what is that answer for this question number 1 ma. So company is there and shareholders are investing in that company. Company is giving the dividend to the shareholders. The dividend is treated as an agricultural income, not an agricultural income ma. This is not an agricultural income. Yes ma. That is taxable under the what ma? Yes ma, is an income from other sources. That is not a business income. We are not doing the business. Just we are investing in that company. That is taxable under the head what ma? Income from other sources. So some students are still they are thinking in otherwise. Can you tell me this is a question already we are discussed. Discussed means nothing but I am already show this question in our workbook ma. So just they will give you the 6 or 7 cases. Out of that 6 or 7 cases, what are the agricultural income, what are the not agricultural income, you have to identify. For this we are getting the 7 marks. So I think some students are knowing the reason why I am discussing this chapter right now. If you are open any question paper, any model test paper, definitely you will get 8 marks from this chapter. Okay. This is a present attempt related MTP ma. So same MCQ. This is a present attempt related question ma. Same MCQ. But they are changing the rubber. Can you tell me rubber means nothing but percentage of agriculture? How much amount ma? How much percentage? What is the percentage related to agriculture proportion with respect to the manufacturing of rubber? 65. Yes. Always you should give preference to this chapter while you are preparing, because within 30 minutes you can get this 7 marks or 8 marks. But if you are observing that, ESMA, this workbook, I will provide this workbook as well as the concept book, all the things in Telegram group, no need to think about it. So please check it out. Question number 4. Question number 4, definitely important. Please prepare all the things carefully. Next. And this is also basic question directly copied from the study material. They are given the what rubber. Can you tell me rubber percentage 65, 35. Coffee ground and cured Can you tell me what 75, 25. Tea 60, 40. Yes. Here I want to know the last one related. Sale of plants from nursery. Sale of plants from nursery. Directly 100% it is an agricultural income. Based on which case law? Saundarya nursery case law. Sir, Pallavi question answer wrong. I don't know where the Pallavi. Why, sir? Okay, after things we can check it out. No issue, ma. I think we are in the discussion of these things. Next, yes. Question number 2 you can verify. Question number 2 you can verify. Mr. X engaged in maybe, but that is not correct. Manufacturing means okay. I thought that is a composite. That is nothing but question framing only wrong, ma. No issue. You can't get the type of interpretation related questions in an examination. So manufacturing means directly they are not doing that manufacturing activities. But okay, if you are observing that answers, I thought that answer also they are given that nil only. But that is not correct, ma. So if that is in manufacturing, definitely agriculture related proportion also there. The type of an interpretation may not be worked out in an examination, no issue. Next. So this is directly non-agricultural income is there, they given agricultural income they are given. Yes, please calculate the tax liability. Normally, some persons are thinking while calculating the tax liability here we have to follow that what aggregation method. Here we have to follow that what aggregation method. Yes. Next. This is also important model, study material model. Please try to solve this question number 1 also. Sir, while you are doing the preparation for this ESMA exam, so please try to give that first preference. That means after the basic concepts and residential status. So please try to prepare this only. Yes. Shall we start the new chapter, ma? All of you, shall we start the new chapter? Yes, we can start the new chapter, that is an advanced tax, ma. So just I'm giving the name of the chapter as an advanced tax and interest, but we don't have any syllabus related to interest, ma. So only advanced tax only, but I'm giving the name as an advanced tax and interest. Okay. Shall we start our discussion, ma? Yes. I think in income tax we have an general rule as well as golden rule. I think in the basic chapter itself we are already discussed what do you mean by the general rule as well as golden rule. Whatever that income you earned during that previous year, on that income you are required to pay the tax in which year, ma? Assessment year. Yes, ma. Whatever that income you earned during the previous year, on that income you are required to pay the tax in the assessment year. Okay. How we are going to pay the tax in that assessment year ma? By way of filing the one statement, that is only called as what ma? Return of income. So many of you are already know about the due dates for the filing of what ma? Return of income. Can you tell me what is the due date ma? First one is 31st 7. Second one 31st October. Third one 30th 11. By using any one of the following due dates, we have to pay that what ma? We have to pay that what ma? Tax by way of filing that what ma? Return of income. Are you clear? What is that golden rule or general rule in tax ma? Whatever that income you are earned during the previous year, on that income we are required to pay the tax in that assessment year by way of filing the return of income, because of this government having the some loss. Can you tell me, suppose if you are earned any income during the first day of the previous year, on that income we are paid the tax after nearly 1 year. After 1 year we are going to pay the tax because of this time gap who having the loss ma? Government. So here there is a huge time gap between the earning of income and payment of tax. We are earning that income in the ESMA previous year and we are paid the tax in assessment year. There is a huge time gap between the payment of tax and income, and because of these things definitely this is a loss to government. Then loss to whom? Government. In order to remove this time gap between the what ma? Income and as well as the payment of tax, they are introduced two concepts. The first concept is an advance tax. Second concept is TDS and TCS. Already we are discussed the TDS TCS in first part itself. TDS and TCS related already we are discussed in the first part itself in ESMA. Right now in second part, yes, we will discuss about the advance tax. How to pay the advance tax ma? Please remember, in a previous year we are required to pay that advance tax in four annual installments. How many installments ma? 4. Not equal ma? 4 installments we have to pay advance tax. Then what about the TDS and TCS ma? Before receiving that income itself, on that income tax will be deducted by whom ma? Payer. Suppose I am receiving the salary income every month. Yes ma? Can you tell me how much amount is credited to your account ma? After deducting the tax by my employer, yes ma? Net salary only credited to my account. But advance tax is different. Whatever that income you are expected to earn during that previous year, on that expected income you have to pay the tax in 4 installments. That is only called as what ma? Advance tax. Are you clear? Yes. Can you tell me, normally if you are paying any tax during that previous year, the tax is only called as an advance tax as well as TDS as well as what ma? TCS. Are you clear? All of you? Yes ma? In an advanced tax chapter we are going to discuss, can you tell me how many sections ma? 207, 208, 209, 210, 211, 219. How many sections? Just we have to learn the 6 sections only. Just we have to learn the how many sections ma? 6 sections only. First section, directly we can start. What do you mean by the advance tax? What do you mean by the advance tax? So we can define the advance tax in a 3 ways ma. First one, if you are paid any tax in advance, that is only called as what ma? Advance tax. Okay, that means if you are paid any tax in advance, that is only called as what ma? Advance tax. Second one, if you are paid any tax during the previous year, that is only called as what ma? Advance tax. Somewhat okay. Third one, it is technically important ma. Pay while you are earning of income. That means nothing but what ma? While earning of income itself, if you are paying any tax, that is only called as what ma? Advance tax. Pay while you are earning the income. This is technically important. Pay while you are earning the income. Yes ma, this is only meaning of advance tax. Maybe this can be given as an MCQ also in your examination. Important, please listen. Yes. After completion of 207, directly I will start with the what ma? 209 I will discuss ma. So after some time I will take the 208 ma. So please take the 209. So 209 is nothing but computation of or calculation of advance tax liability. Okay, we have to pay the advance tax during the previous year. We have to pay that advance tax during the previous year. How to pay the advance tax? So how to calculate the advance tax liability in how many steps ma? In totally 4 steps we have to calculate the advance tax liability. First step, please calculate estimated total income during the current previous year. During the current previous year, please estimate your total income based on trends only. First month you are earned the 1 lakh. Can you tell me what is the estimated total income of the previous year? 12 lakh only. Second, on the estimated total income, please compute the tax liability. How to calculate the tax liability? I think in the first chapter itself, you know, income tax, after that surcharge, after that health and education cess. If you are adding these 3 components, that is only computation of what ma? That is only computation of what ma? Tax liability. So please remember, while you are calculating the tax liability, you have to calculate income tax, surcharge and health and education cess. Step 3. Step 1, you are getting that advance tax liability. From that, we have to reduce the TDS and the TCS and the relief under section 89(1). Why we have to reduce it, ma? Before paying that advance tax itself, we are already paid the taxes in the form of TDS or TCS in previous year. That's why no need to pay those type of taxes once again. Yes, we are already paid some amount of tax before the payment of our advance tax itself. That's why we can reduce the TDS, TCS as well as relief under section 89(1). In salaries chapter, you can get the relief under section 89(1) ma, because of an arrears of salary. If your tax liability isn't more, that more amount of the tax liability isn't given as an what ma relief. That type of tax also no requirement to pay. So that's why we can reduce it. Finally, you can get the what ma balance advance tax liability. Please remember what is that ma? Balance advance tax liability. Please remember, balance advance tax liability is more than or equal to 10,000. Then only SSE liable to pay advance tax. Then SSE liable to pay what ma? Advance tax. Please calculate the all the 4 steps. In the third step, if your advance tax liability, balance advance tax liability more than or equal to 10,000, then only we are required to pay the what ma? Advance tax liability. So can you repeat the steps for me? This is only the important point in the entire chapter ma. Please remember. Yes. First, estimate the total income during the current previous year. On that estimated total income, please calculate that what ma? Tax liability. From the tax liability, please reduce the TDS, TCS and relief under section 89(1). If your balance advance tax liability more than or equal to 10,000, then you are required to pay that what ma? Advance tax. Then you are required to pay that what ma? Advance tax. Next one. Section 208 we will discuss ma. I think you know we kept some section 208 as an what ma? Pending. 208 right now we will discuss. 208 is nothing but favorable provision to the SSE. This is a nothing but relaxation ma. This is a nothing but what ma? Relaxation. Shall we start? Yes. If you are a resident senior citizen and not having the PCBP income, then if these 2 conditions are satisfied, first one, if you are a resident senior citizen and not having the PCBP income, that person no need to pay. That person no need to pay advance tax, even if balance advance tax liability more than how much amount ma? 10,000. So that's why first we are calculating the advance tax liability and balance advance tax liability, then only you can understood. If you are asking how to calculate the balance advance tax liability, please refer to 209. Already we are calculated. If your balance advance tax liability more than 10,000, definitely you have to pay advance tax liability. But following person is not required to pay. Can you tell me who is a following person? Ma? Resident senior citizen not having the PCBP income. So if you refer the as my last point, can you tell me what is the last point ma? Advance tax liability is 15,000 and is not having the PCBP income and his age is nothing but what ma? 65 years. Is a resident senior citizen. Yes ma? Resident senior citizen. So that's why advance tax provisions are not applicable for him. Advance tax provisions are not applicable for him because it was covered under section 208. It was covered under section what ma? 208. Are you clear ma? First of all, we are discussing the provision relating to advance tax meaning. Then after 209, how to calculate advance tax liability. 208 is relaxation. 208 is nothing but what ma? Relaxation. Are you clear? Next, 210 ma. Next we can discuss the what ma? 210. Next we can discuss the what ma? 210. What is the 210 section? So how to pay the advance tax? Please remember, advance tax needs to pay in installment wise. So what are that installment? Please check it out. 211 for that installments due dates. Advance tax needs to payable in installment wise as mentioned in where ma? 211. So that's why we need to discuss the 211. So advance tax installments ma. Advance tax installment. Shall we start ma? Yes. If any SSE who opted the presumptive taxation provision under section 44 AD and EADA, not AEMA. 44 AE is not covered here. In PCBP chapter, we can discuss the presumptive taxation provisions ma. If you are observing that, if any SSE who are following the presumptive taxation provision under section 44 AD, EADA, for that the presumptive taxation following person, due date is nothing but single due date, that is on 15th March of the previous year. So no need to pay that multiple installments ma, only one installment, that is also last month of the previous year 15th ma. Next, other than the SSEs who opted the presumptive taxation under section 44 AD, if any SSE following the 44 AD ADA, single due date. So nothing but here we are discussing that what ma? Other persons. Yes ma? Other persons. Are you clear? Yes. Installment date. How many installments ma? Please remember here. How many installments? 4 installments. Quarterly ma. First one 15th 6th of an previous year. Second one 15th 9 of an previous year. Next 15th 12 of an previous year. Next 15th March of an previous year. 15th March of an what ma? Previous year. Please remember how many due dates we have in ma? 4 due dates quarterly. 15th March, 15th September, 15th December, 15th March. So just in section 209, if you have calculated the balance advance tax liability, how much balance advance tax liability we have ma? 1 lakh. How much balance advance tax liability we have ma? 1 lakh. If your balance advance tax liability is in 1 lakh, yes ma, what they are given in the, yes ma, what they are given in this part ma? First, you have to pay at least, you have to pay at least 15% of advance tax liability. At least how much percentage ma? 15% of advance tax liability. Can you calculate 15% of 1 lakh ma? 15,000. Sir, if you pay more than 15,000, okay, but at least you have to pay how much amount ma? 15,000. Second one, at least you have to pay the 45% of advance tax liability. Second installment, can you tell me at least how much amount you have to pay ma? 45. Can you tell me 1 lakh into 45%? 45,000. But we already paid how much amount ma? 15,000 during the first installment, minus you need to pay freshly how much ma? 35,000. That's why this 15%, 45%, all the percentages are expressed in where ma? Cumulatively. So that's why no need to pay 45,000 again. We are already paid how much amount ma? 15,000. Please reduce it. Balance amount only you have to pay. In third installment, at least you have to clear 75% of advance tax liability. What is that ma? 75% of advance tax liability. Can you tell me 75% means 75,000, but in first installment we paid the 15,000, in second installment we are already paid the 30,000, then balance 30,000 only you have to pay in third installment. In last installment we need to clear that full amount ma. We need to clear what ma? Full amount. Yes, we need to clear that what ma? Full amount. That means 1 lakh you have to clear in the last installment. Yes. Yes, ma. Sorry for that interruption. Yes, ma. Please check it out right now. I think power issues. So right now, please check it out, ma. Audio and video is clear or not. So please give me confirmation, ma. Then we can start the discussion. If okay. Yes, ma. Please check it out. The yes. Calculate the advance tax, ma. 15% of advance tax like. Next. Yes. In last installment, we need to pay that what ma full amount. In last installment, we need to pay that what ma full amount. But in first installment, we are already paid 15,000. In second installment, we are already paid 13,000, 30,000. In third installment, 30,000. After that, finally, we have to pay what ma 25,000 only. And please remember, if any presumptive taxation provision under section 44 AD, ADA followed single installment. For AE, 4 installments only. If you are following that 44 AE also, 4 installments quarterly, 15th 6th, 15th 9th, 15th 12th, 15th March of an previous year. Are you clear, ma? Yes. Next, we have one more section in this chapter, that is an advance tax credit. What is that, ma? Advance tax credit. Whatever that advance tax you are paid during the previous year, that is you can take it as an credit while you are paying the tax in which year ma assessment year. So that means no need to pay the tax again in that assessment year, whatever that amount. Example, in an assessment year you have to pay the tax as an 5 lakh ma, but in the previous year you are already paid that advance tax 2 lakhs. Yes ma, advance tax how much amount you are paid ma? 2 lakh. So that's why you can take the yes ma this credit, and finally what is the tax payable ma? 3 lakhs only. Whatever that advance tax you are paid during the previous year, that amount you can take it as an what ma credit while calculating the tax payable in which year ma assessment year. Clear all of you? Yes. But please remember, we don't have any interest related things in our syllabus, but I want to tell you these 3 section names. You have to remember these 3 section names as well as what ma things also. So that's why. Shall we start? The advance tax provisions are over. If you are observing section 207, 208, 209, 210, 211, these are all the things are over. Next we have to discuss the what ma interest related points. Just please start these things ma interest related. So 3 sections numbers you have to remember 234A. So this is a nothing but interest relating to non-filing as well as what ma late filing of return of income. Yes ma, late filing of what ma return of income. Non-filing as well as what ma late filing of what ma return of income. You have to file the return of income on or before the due dates under section 139(1). If you are not filed as well as late filed of an return of income, then you have to calculate that interest under section 234A. Next 234B. 234B. What is that, ma? Interest for non-payment or short payment of advance tax. In total, during the previous year, if your balance advance tax liability is more than 10,000, definitely you are required to pay that what ma advance tax, but you are not paid the advance tax, or you are paid that is less than the required amount. So that's why you have to calculate that interest under section 234B. Next to 234C. What is the 234C, ma? Interest for deferment of advance tax installment. I think you know we have an advance tax installments. Yes, ma. 15th June, 15th September, 15th December. Yes, ma. 15th March. Yes, ma. First installment, ma. What is the percentage, ma? 15%, 45%. Next, ma. 75%, 100% we have to clear. Every installment, if you are deferred any installments or you are not paid the installments prescribed percentages, then you have to calculate that interest under section 234C. 234C is an installment wise related interest. 234B is an total previous year paid advance taxes and short paid or non paid. Are you clear with the advance tax and return of income related interest section numbers, ma? Section numbers only we have in our syllabus. No need to discuss in depth, ma. In CMA Inter we have only section numbers only. But in CMA Final we have contents also. In final level we can discuss these things, ma. Right now please remember these three sections. 234A for that return of income, 234B for that advance tax, 234C for that what, ma? Advance tax related installments. So this is only a small chapter, but we have to discuss the what, ma? We have to discuss the what, ma? Questions, workbook questions. You have to do the question number 3, very very important. Question number 3, definitely you have to do this question number 3 before going to the examinations, ma. Find out the advance tax payable by A on specified dates. I think you know what are the specified dates also. What are the specified dates also? Sir, here we have a non-agricultural income as well as agricultural income. How to calculate the tax liability, ma? By using partial aggregation method. That means combination of two chapters related question. First, please calculate the tax, ma. First, step 1, tax on what, ma? Agricultural income plus non-agricultural income. Step 2, tax on agricultural income plus what, ma? Basic exemption limit. Difference between that what, ma? Step 1 and step 2. We are getting that what, ma? 27,600. So this person having that what, ma? More than 5 lakh. That's why no need to calculate the rebate here. No need to calculate that what, ma? Rebate here. Yes, add the health and education says finally how much amount you are getting, the 28,704. From that we can reduce the TDS. I think you know, yes ma, we are already paid the TDS, all the things before advance tax itself. Finally how much amount of an advance tax you have to pay, ma, after reducing the TDS? 24,000. Sir, always this is an alternative 2 only the better for us, sir. Alternative 1 answer is nothing but we are not discussing. Alternative 2 only better for us. So I think you know, yes ma. First installment, what is that percentage, ma? 15%. 30. That means 3,600 we have to pay. Second installment, 45% we have to pay. But already we are paid that what, ma? 3,600 minus that we can pay that what, ma? 7,200. Next 75%. But already first installment we are paid 3,600. Second installment we are paid that what, ma? 7,200. Third installment 100% of that you have to pay, and first installment, second installment, third installment we are paid. Finally you have to pay that what, ma? Total 24,000 as an advance tax, but in first installment 3,600, in second installment 7,200, in third installment 7,200, in fourth installment balance 6,000 you have to pay. Are you clear this question, ma? First of all please let me know. This is an important model, because normally you have to calculate the tax liability, but here what is that method we have to follow for calculating the tax liability, ma? Aggregation method we have to follow. And after calculating the tax liability, we have to reduce that what my TDS, because after balance tax liability, yes, this is only called as a balance tax liability. That balance tax liability is more than 10,000. Definitely, you have to pay that advance tax liability in an installment wise. Yeah, can you tell me they are mentioned anything about the presumptive taxation? Ma? No. So that's why how many installments we have to follow? Ma? 4 installment. First installment 15%, second installment 45%, next installment 75%, next installment 100% we have to follow. Are you clear with this question, ma? First of all of you. So who are following this session? Are you clear with the advanced tax and interest chapter? Yes, ma. Then we can start the next. We know we have an 5 heads of income. Out of that, yes, first head of income is nothing but salaries, house property, PCBP, capital gains, income from other sources. Right now, we need to discuss about the capital gains, sir. Can you tell me capital gains related sections starting from the 45, ended with the what mark 55? And you know, every head of income starting section is nothing but what mark charging section. Every head of income starting section is called as an what mark charging section. In capital gains chapter, can you tell me what is the charging section mark 45? Straight away we will start with the 45, that is in charging section. Charging section 45 subsection 5 is nothing but talking about the charging section ma. Please remember, if any profits and gains arising from the transfer of capital asset, if any capital asset is on transfer, on the transfer of such a capital asset, if any profit or gain is an arises, that is unchargeable to tax under the head capital gains in that year of transfer. Can you tell me in the year of transfer? Just one example I want to take it down. Yes, ma. Mr. A having one house. Mr. A have one house. He wants to sold that house to Mr. B in the previous year 23-24. In the previous year 23-24 on 1/12/2023 for how much amount? 85 lakh. He purchased this house in 1/9/2023 for 75 lakh. Can you tell me? Here he have one capital asset, that is an house, that isn't transferred. Yes, ma. And in this situation, definitely we have to calculate the capital gain. If any capital asset is there, that is on condition number 1. If that isn't transferred, condition 2, definitely we are required to calculate the capital gain. Can you tell me capital gain we have to calculate in the year of transfer? Can you tell me what is the year of transfer? 23-24. 23-24 we are required to calculate the capital gain. How to calculate the gain ma? Yes, sale consideration is an 85 lakh and we are purchased it for the 75 lakh. This 10 lakh is calculated as an what ma? Capital gain. This 10 lakh is called as an what ma? Capital gain. So please remember two conditions we have to check ma. First condition is nothing but capital asset. Second condition that must be transferred. Definitely we have to calculate the capital gain in the year of transfer. In other words, that is only we can call it as an what ma? We have to follow the accrual basis. That means whether you are received that consideration or not receiving that consideration, that is not required. In the year of transfer, we are required to calculate the capital gain mandatorily. We are required to calculate the capital gain mandatorily. Please remember, yes. What is the method of accounting we are required to follow for the capital gain head ma? Accrual. That is nothing but in the year of transfer. What are the some exceptions ma? We have in some exceptions, that is in 45 subsection 1A, 45 subsection 2, 45 subsection 5. How to calculate the capital gain in these three exceptional cases? We will discuss it separately ma. But please update. Yes. What is that ma? Two conditions we have to satisfy ma. First condition, there must be a capital asset. Second one, there must be a transfer. If these two conditions are satisfied, definitely we need to calculate the capital gain in the year of transfer. That is nothing but on accrual basis ma. Can you tell me what are the exceptions ma? Yes, we have in section 45 subsection 1A, 45 subsection 2, 45 subsection 5 also there. Yes, next one. Right now we will concentrate on the capital asset definition. Can you tell me what do you mean by the capital asset? Section 2 subsection 14 is talking about the capital asset definition. From this definition definitely we can get one or two MCQs also, or one maybe short answer type question. Define the capital asset. Maybe you can get ma, that's why please refer. What do you mean by the capital asset? Capital asset includes the following things ma. What are that inclusions ma? First, what are the inclusions? First, any property that is movable, immobile, tangible, intangible, whether it is connected to the business or not. What are the things ma? Any property in kind that is movable, immobile, tangible, intangible, whether it is connected to the business or profession or not. That is treated as what ma? Capital asset only. Next, if any security is held by the foreign institutional investor, which is an investor, normally ESMA foreign institutional investor is holding the securities in India. Definitely, that security is also treated as a capital asset because he is invested in accordance with the what ma SEBI guidelines. Next one. If you are subscribing any unit linked insurance policy on or after this date, which exemption is not applicable. If an exempt that isn't not taxable, yes ma, if exemption is not applicable under section 10 subsection 10D, exemption under section 10 subsection 10D is not applicable for that unit linked insurance policy, definitely on that, yes ma, we are required to calculate the capital gain. That's why that is included in the capital asset definition. These three only we have an inclusions in the capital assets ma. What are the three ma? Any property that is yes ma, mobile, immobile, tangible, intangible, whether it is connected to the business or not. Any securities held by the foreign institutional investors, which is invested in accordance with the SEBI guidelines. Unit linked insurance policy ma, if any unit linked insurance policy is subscribed or issued on or after 1/2/2021, for which exemption under section 10 subsection 10D is not applicable. If an exemption is unapplicable, no need to calculate the capital gain ma. If an exemption is not applicable, definitely that is a capital asset, on that we are required to calculate the capital gain. But exclusions list is very important. Exclusions list is very important. Please remember, yes ma, we have to exclude the stock and trade. If you are selling any stock and trade, on that we have to calculate the PCBP, not capital gains. That's why we are excluded the stock and trade from the capital asset definition. Are you clear? We are excluded the ESMA stock in trade from the capital asset definition because if any stock in trade is sold, on that we are required to calculate the PCBP. Next, personal effects also excluded from the capital asset. Agricultural land situated in a non-specified area. Can you tell me what do you mean by the non-specified area ma? Rural area. What do you mean by the non-specified area ma? Rural area. If any agricultural land situated in a rural area, that is not a capital asset. Next one ma, specified gold bonds, special bearer bonds, gold bonds issued under gold deposit scheme 1999, ESMA deposit certificate issued under gold monetization scheme. These are all the things are excluded from the capital asset definition. That means these are all are not treated as what ma? Capital asset. So stock in trade you know already very well. I want to discuss some things about the what ma? Personal effects. What do you mean by the personal effects ma? Simple. Personal effects means if anything is unmovable, as well as what ma? If anything is unmovable, and as well as what ma? If that isn't used for personal purpose, that is treated as what ma? Personal effect. That must be used by the SSE or his family members. Example I will tell you. Yes ma, car is a movable asset that isn't used for the personal purpose. Definitely that is not treated as what ma? Capital asset. That is not treated as what ma? Capital asset. Yes. Following things are excluded from the personal effect. Can you tell me these are the few things are excluded from the personal effect? Can you tell me what are the things are excluded from the personal effects ma? Jewelry, archaeological collection, drawings, paintings, sculptures or any other work of art. These are excluded from the personal effect. If anything is an excluded from the personal effect means that is an included in the where ma? Capital asset definition. It is an included in the where ma? Capital asset definition. Are you clear ma up to now? All of you? Yes, personal effects are excluded from the capital asset. If anything is excluded from the personal effect like jewelry, archaeological collection, drawings, paintings, sculptures, work of art, these are all the things are included in where mark capital asset. These are all the things are included in that where mark capital asset. Are you clear up to now? Right now we need to discuss about the yes ma personal effects over. Next we have to discuss about the agriculture land situated in a non-specified area, that is an rural area. Sir, specified area means nothing but what ma, that is an urban area. So other than urban area, that is an rural area, other than specified area, that is an what ma, non-specified area. Can you tell me specified area they are defined in the act clearly? If your population, that means if the city population is 10,000 to 1 lakh, from the municipal limits up to 2 kilometers, that is a specified area. Beyond the 2 kilometers, that is a non-specified area. Beyond the how many kilometers? 2 kilometers, that is a non-specified area. Are you clear? Yes. Next one, if the population is nothing but 1 lakh to 10 lakh, yes ma, from the municipal limits up to 6 kilometers is specified area. After that 6 kilometers, that is an what ma, non-specified area. Next, if the population of the city is more than 10 lakh, then up to 8 kilometers is a specified area. After that 8 kilometers, that is a non-specified area. So if any agricultural land situated in non-specified area, that is not treated as what ma, capital asset. So please remember, any area other than specified area, any area other than specified, that means from that municipal limits 2 kilometers, 6 kilometers, 8 kilometers, 2 kilometers, 6 kilometers, 8 kilometers. So beyond the 2 kilometers, beyond the 6 kilometers, beyond the 8 kilometers, that is treated as what ma, non-specified area. If any agricultural land situated in non-specified area, another name ma, rural area, that is not treated as what ma, capital asset. If agricultural land situated in outside India, it is an always capital asset ma. This is also important point. This is also important point. Okay. Shall we do that one MCQ ma? Shall we do one MCQ? All of you? Okay. Just. So please tell me the answer for the 7th question ma. MCQ number 7. Please tell me. Please give me question number 7 related answer ma. Which of the following is not a capital asset under section 2 subsection 14? Answer. Yes ma. Agricultural land in which area ma? Rural area. If any agricultural land situated in rural area, that is not a capital asset, because that is an excluded from the capital asset. That is an excluded from the capital asset. So if you are learn the concept, automatically you can write the MCQs, sir. No need to prepare that MCQ separately. If you know that concept, automatically you can write that what ma, MCQs also. Okay. Up to now we are discussed capital asset includes and excludes ma. Next we have to discuss about the transfer includes and excludes. Transfer includes and excludes. Super ma. Transfer includes and excludes. Transfer includes section 2 subsection 47 ma. Transfer excludes section 47. Yes ma. 2 subsection 47 transfer includes. Section 2 subsection 47 transfer includes and excludes contains in section 47. Transfer includes we will discuss ma, just a few things we will discuss in a speed manner. Sale of capital asset is treated as transfer only. Exchange of capital asset is also treated as what ma? Transfer only. Relinquishment of capital asset. Can you tell me what do you mean by the relinquishment ma? Simply, yes ma, we are transferring the right only without transferring the asset. We are transferring the only right without transferring the asset. That is only called as what ma? Relinquishment. It can be happened only in case of what ma? Intangible assets. If you are observing one example, yes ma, Mr. F having that mine, yes ma, he is giving the mining rights to that Mr. X, yes ma, how much amount ma he's taken for 10 years, he has to pay that what ma, 1 crore every year, yes ma, leasing rights he has taken. Okay. After taking that leasing rights, yes ma, Mr. X selling these leasing rights to Mr. Y for the 3 crores. That means nothing but we are taken every year 1 crore related things. Here we have an, yes ma, 3 crores related deal is there. That's why we are giving the, can you tell me what is that ma? Not asset. We are just transferring the mining rights only. Who is an owner of that site ma? Mr. F only that owner. Right now we are transferring the rights to the Mr. Y in this case. Can you tell me who is in transferor ma? Mr. X is in transferor. Who is in transferee ma? Mr. Y. Mr. Y is in transferee. Who required to calculate the capital gain? Who required to calculate the capital gain ma? Mr. X required to calculate the capital gain. Yes ma, Mr. X required to calculate the what ma? Capital gain. Here, why, what is a capital asset here? Intangible. We haven't one right, that is an intangible capital asset. We can transfer the capital asset and we are transferring the capital asset. That's why we are required to calculate the what ma? Capital gain. Sir, I learned all the provision, but in application to the problem, I can't solve the problem facing the difficulty. That means you need to do that practice. That is only that one solution. If you know that provision, directly you have to solve the problems. So, by way of looking the problems, you can't understood anything ma. Because while you are solving that every problem, you have to refer the lot of provisions. Practice only. Yes. Next thing, extinguishment of capital asset. What is that ma? Extinguishment of capital asset. But in relinquishment, just we are transferring the right only. In relinquishment, we are transferring the right as well as asset. We are transferring that what ma? Right as well as what ma? Asset. Please remember, yes, we are purchasing that 8% debentures from the XYZ Limited. Yes ma, they are taking that what ma? Debentures redemption or liquidation of shares, redemption of preference shares, destruction of any asset. In this situation, if any redemption isn't happened, definitely they will give you that amount, they will take back that what ma? Debentures. In this situation, what is that capital asset here? Debentures is an capital asset. Transfer means called as an what ma? Extinguishment. Hereafter, I don't have any debentures in my hand, as well as I am living that what ma? Debenture holders related rights also. So that's why in that extinguishment, I lost the right as well as what ma? Assets also. In this situation, that is also treated as what ma? Transfer. Compulsory acquisition also treated as what ma? Compulsory acquisition of capital asset also treated as transfer only. If any capital asset is converted into stock in trade, that conversion also treated as what ma? Transfer. Redemption of zero coupon bonds also treated as transfer. And if any part performance of a contract, that is section 53 of Transfer of Properties Act, that is also treated as what ma? Transfer. So please remember, these all the things are ways treated as a transfer. Many persons are thinking as a sale of capital asset only treated as transfer. No, sale, exchange, relinquishment, extinguishment, compulsory acquisition of capital asset, conversion of capital asset into what ma? Stock in trade. So right now I have some capital asset in my hand. I want to do the business by using this capital asset. So that's why I'm converting this capital asset into stock in trade. This is also treated as transfer, and redemption of zero coupon bonds. Zero coupon bonds redemption also treated as transfer. And if any transfer of Properties Act related section 53A, as per if any part performance of contract isn't happened, that is also treated as what, ma, transfer. These are all cases we are treated as a transfer only. These are all the cases we are treated as what, ma, transfer only. Yes. Transfer excludes, ma. I don't want to discuss that many things. I want to discuss the first three things excludes only, because these three things are very important for an examination point of view. These three things are very important in an examination point of view. That's why we will discuss the first three things only in transfer excludes. The many things are there, ma, but first three things are very important. Yes. Why we are discussing the transfer includes and excludes also, ma? If that is an transfer and if that is an capital asset, if these two things are satisfied, then only we are required to calculate the gain. That is only called as what, ma? Capital gain. So that's why transfer includes isn't just we are discussed in rough manner, but excludes we will discuss the first three things, ma. What are that excludes, ma? Yes. First one, gift, will, inheritance, irrevocable trust. Gift, will, inheritance, as well as what, ma? Irrevocable trust. Yes. If father giving the what, ma? Any house to son based on what, ma? Inheritance. Based on what, ma? Inheritance. That is treated as capital asset only, because that is an house, that is an immovable property, capital asset, but that is not treated as what, ma? Transfer. That's why no requirement to calculate the capital gain. Why this is not treated as transfer? In this situation, can you tell me sale consideration is nothing but what, ma? Zero. So that's why this is not treated as transfer. If any asset isn't given by way of gift, will, inheritance, irrevocable trust, or irrevocable transfer, whatever it may be, that is not treated as what, ma? Transfer. Next, partial partition or total partition of HUF. So if you are taken that example as an HUF, HUF isn't distributing that all the assets to their members. These are the capital asset only, but this is not treated as transfer. No need to calculate the capital gain. Here also, no consideration can be paid by the members to that HUF. Here also, we are not receiving any consideration. That's why this is also not treated as what, ma? Transfer. Next, third one. If holding company given the capital asset to subsidiary and subsidiary company giving any capital assets to holding company, yes, ma, please remember that is not treated as transfer if the following conditions are satisfied. What are the following conditions, ma? Shareholding is 100%. That means what, ma? Yes, ma, 100% of the share capital held by the holding company. That means wholly owned subsidiary relationship. Not more than 51 or 55 or 60%, ma, entire holding. That means what, ma? 100% of the shareholding held by the holding company. That companies are called as an wholly owned holding company, wholly owned subsidiary company, we can call it. Next, second one, recipient company must be what, ma? Indian company. If these two conditions are satisfied, that is not treated as transfer and no requirement to calculate the what, ma? Capital gain. If you are observing that wholly owned company, wholly owned holding company, wholly owned subsidiary company is giving the one capital assets to subsidiary, recipient company here Indian company, that's why no requirement to calculate the capital gain. Next, if you are observing that wholly owned subsidiary company giving the capital assets to wholly owned holding company, this is a recipient company, Indian company, here also they are not required to calculate the capital gain. Next thing, one exception is there, ma. One exception is there. Please remember that exception. Here wholly owned holding company, that is involving the software, they are given the one, yes, ma, building to that what, ma? Their subsidiary company, that is in real estate, that Indian company only. The recipient company is nothing but what, ma? Indian company only. Recipient company recipient company is an Indian company only. But can you tell me, whatever the building is received by the real estate company, that is a stock in trade or capital asset, ma? Stock in trade. whatever the building is and received in the hands of wholly owned subsidiary company. Wholly owned subsidiary company is doing that what ma real estate. So can you tell me what is that building in the hands of the real estate company ma stock in trade? In the hands of recipient company, if the asset is received as a stock in trade, yes ma, on that, yes ma, we have to calculate the capital gain because that is treated as transfer. Can you tell me in this situation, please make an observation, in the hands of recipient company, if that is a capital asset, then only that is not treated as transfer. But in this situation, in the hands of the recipient company, that building is nothing but what must stock in trade. So that's why definitely who are the transferring that asset, they are required to calculate the capital gain. They are required to calculate the what ma capital gain. I think if you remember, we are discussed the capital asset includes as well as excludes, as well as transfer includes and transfer excludes. No need to refer the all the transfer includes and excludes ma. Just remember, yes ma, sale, exchange, relinquishment, extinguishment, compulsory acquisition of capital asset, conversion of capital asset into stock in trade, yes ma, redemption of zero coupon bonds, section 53 of Transfer of Properties Act or part performance of a contract. Next, excludes ma gift, will, inheritance, irrevocable trust, total partition as well as partial partition of HUF. Next one ma holding company is given the SS to subsidiary company. Yes ma, subsidiary company or giving to the holding company. The two conditions. Can you tell me what are the two conditions ma? Shareholding must be that 100%, that is an wholly owned holding as well as wholly owned subsidiary company relationship. Next, recipient company must be Indian company. If these conditions are satisfied, that is not treated as what ma transfer. Are you clear ma up to now all of you? Are you clear ma up to now? Next. Yes ma. Next concept important for an MCQ purpose, nature or types of capital asset. Yes, all capital asset we have to classify into three types ma. First category 1, category 2, category 3. How many types ma? Category 1, category 2, category 3. Sir, in category 1, I want to tell you, I want to cover only 3 ma. Sorry, only 4. What are that 4 ma? Listed equities, listed securities, sorry, listed securities, units of equity oriented mutual fund, units of unit trust of India, zero coupon bonds. What are the 4 things are covered in the category 1 ma? Listed equity shares, units of equity oriented mutual fund, units of equity oriented mutual fund, units of unit trust of India, zero coupon bonds. If first 4 assets, whatever it may be in your hand, If that period of holding is less than or equal to 12 months, that is a short term capital asset. More than 12 months, that assets are called as what ma? Long term capital asset. That is treated as what ma? Long term capital asset. Please remember. Next, category 2. Please refer, what is that ma? Category 2. Yes. Next, in category 2, if you are observing, unlisted shares only. If you are observing, the securities means nothing but how many ma? So security means nothing but what ma? Shares as well as debentures, bonds as well as what ma? Deposits. If the securities are listed, covered under category 1. If securities are listed, covered under category 1. Next, unlisted shares only, covered under category 2. Next one, immovable property, that may be land, building as well as what ma? Both. That is an land, building as well as both. If that two assets, that is an unlisted shares, immovable properties, that is an what ma? Land, building as well as what ma? Both. Period of holding less than or equal to 24 months, short term capital asset. More than or equal to 24 months, that is an what ma? Long term capital asset. Okay. Next, third category, that is an unlisted securities other than shares, because yes ma, listed already covered under category 1. Unlisted shares already covered in category 2. The remaining unlisted securities other than shares, that is nothing but what ma? Debentures, bonds, deposits, etc. covered in category 3. Any other capital asset, can you tell me example ma? Intangible capital asset. Whatever that capital asset not covered under category 1, category 2, having that place in category 3, other capital asset. That is nothing but what by intangible capital assets. If that all the capital asset covered in category 3, please check it out the period of holding how many ma? 36 months or less than or equal to 36 months, short term capital asset. More than 36 months, covered long term capital asset. More than 36 months, that is covered under what ma? Long term capital asset. Are you clear? Next, very important amendment for this attempt ma. Definitely you can get these two things, sir. MCQ purpose as well as while you are doing the problems, definitely these are very important ma. Yes. If any capital gain arising from the transfer of first one, market linked debentures, second one, units of specified mutual fund. What are the things ma? Capital gains are arising from transfer of these two things. The first one, market linked debentures. Second one, units of specified mutual fund. Always treated as what ma? Short term capital asset only. On that we can get the what ma? Short term capital gain irrespective of the period of holding. Don't check it out the period of holding, whether it is on 12 months, more ESMA or 24 months or 36 months. No need to check it out ma. Directly we can classify it as an what ma? Short term capital asset. On that we can get that what ma? Short term capital gain. This is in section 50A amendment in the Finance Act 2023. Definitely this is a very important ma. If any capital gain arising from the ESMA transfer of market linked debentures, this is one capital asset. Yes ma, transfer of units of specified mutual fund, it is another capital asset. Always it is a short term capital asset. On that we can get the short term capital gain only irrespective of the period of holding, because the market to market means nothing but what ma? Always these values is an updated, as well as specified mutual funds also always that is a mark to market only. So that's why while you are calculating the capital gain, always this is a short term capital gain only irrespective of the period of holding. For all the asset we have to check it out the period of holding in order to classify whether the capital asset is nothing but short term or long term. Yes ma, but for these two assets always what ma? Short term only. Clear? Are you clear ma up to now? Next, what do you mean by the period of holding? So I think last time we are discussed the period of holding if it is less than or equal to 12 months short term, more than or equal to 12 months, more than 12 months long term. In case of category 2, 24 months we have to check. In category 3, 36 months we have to check. But what do you mean by the period of holding? Period of holding means nothing but what ma? Starting from the date of acquisition, ending with the what ma? Date of transfer. While calculating the period of holding, can you tell me? Always the date of transfer shall be excluded. So that means we are purchasing on this date ma and transferring on this date. Period of holding means nothing but what ma 1/4/2023 to 30th 12 2023 only, because date of transfer of the asset always shall be excluded from the period of holding, because it shall be included in the another person period of holding as an acquisition date. Are you clear ma up to now? What is that ma? If any asset isn't transferred, yes ma, we have to calculate the capital gain, because it is a capital asset that isn't transferred. We have to calculate the capital gain. In order to know about whether it is a short term capital gain or long term capital gain, we need to know about the period of holding. While calculating the period of holding from the date of acquisition to date of transfer shall be excluded, because it will be included as in the period of holding of another person as in what ma date of acquisition. But we have to remember this some special provisions ma, some special provisions, that is only the first. Yes, please remember, basic questions only always we are getting from these chapters ma. Basic questions only, not in depth. If you are an integrated student, CA as well as CMA, CA always they are given the difficult questions related to capital gain. I will show you the number of question papers also. I will show you the number of question papers also. They are giving the basic questions only. Whatever the concept I covered in this marathon related to capital gain, please refer that provisions. Then definitely you will get the 8 out of 8 or 7 out of 7 also. 7 marks question definitely from the capital gain chapter. You need to solve the question without any mistakes. So that is only the objective of this session ma. Yes. Sir, in special case, how to calculate the period of holding? Nothing but what ma? So, if any asset is an acquired under 49 subsection 1 modes, that means we are acquiring asset under gift, inheritance, will, amalgamation, demerger, etc. These are the modes are covered under section 49 1 ma. If you are getting any asset under these modes, how to calculate the period of holding? Just I want to take one example. Listen carefully. Mr. X purchased one house in 2009-10. He is giving the gift of this house to his son in 16-17 ma. Can you tell me? Here one capital asset is there. Yes, no need to calculate the capital gain, because he is giving the gift to his son. That is not treated as transfer. Are you remember this point ma? Transfer excludes, we are already discussed at one point. If any asset is given as a gift, will, inheritance, irrevocable transfer or irrevocable trust, that is not treated as transfer. That's why while transferring this asset to that his son, while giving the asset to his son as a gift, no need to calculate the what mark capital gain. Next, please remember, his son is sold this house to that Mr. Z in 23-24. Definitely this isn't treated as transfer. I think you know transfer includes sale, exchange, extinguishment, relinquishment. Many points are there. Yes, this is a capital asset and this is a transfer. Here you are required to calculate the capital gain. But what is a period of holding in the hands of Sanma? Period of holding means many persons are thinking this is only the period of holding from the date of acquisition to date of transfer. Here you are not acquired. So directly you are not acquiring such asset. That's why period of holding starting from the date of purchase done by the previous owner, from the date of purchase by the previous owner to the date of transfer, to that what ma? Date of transfer. Are you clear ma? Are you clear ma? Very important. If you are purchasing any asset directly, from the date of acquisition to date of transfer, From the date of acquisition to date of transfer. If you are acquiring any property by way of gift, inheritance, will, amalgamation, demerger, if you are transferring that property to any person, at the time you are required to calculate the capital gain. Then what is the period of holding in this situation? Period of holding should start from the date of previous owner purchase date to date of transfer. In this situation, period of holding is started from the 2009-10 to 2023-24. Are you clear, ma, up to now? Just I am expecting a simple reply from all of you. Yes. We can solve some questions also after the completion of theoretical discussion on paper, ma. We can solve some questions also, no issue. Next point. Computation of capital gain, ma. Computation of what, ma? Capital gain. How to calculate the capital gain? Sir, normally we have in two formats, ma. First one, in case of non-depreciable capital asset, we have to follow the section 48. For the depreciable capital asset, we have to follow section 50. Please remember, for non-depreciable capital asset, we have to calculate the what, ma? Capital gain by using section 48. For depreciable, we have to follow that what, ma? Section 50. Section 50. Just I will tell you a simple example. Mr. A, yes, ma, he sold the one residential house property. Can you tell me it is a depreciable capital asset or non-depreciable, ma? Always please think, ma. Mr. A is selling his residential house property, whether it is a depreciable capital asset or non-depreciable capital asset, all of you. Mr. A is selling the one residential house property, ma, whether it is depreciable or non-depreciable. Just say your opinion. Yes, ma, non-depreciable. Why it is a non-depreciable? If anything is used in the business or profession, that is only, if anything isn't used in the business or profession, that is only depreciable capital asset, ma. Here the reason residential house property, so that's why it is an always treated as what, ma? Non-depreciable capital asset. So that means whether it is a depreciable capital asset or non-depreciable capital asset, how we can identify, ma, whether it is used in the business or profession. In this situation, residential house property, that means that is personally we are used, so that's why this is a non-depreciable capital asset. Can you tell me non-depreciable capital asset means what is the section we have to follow, ma? 48. Just I want to show you the format. If any short-term capital asset is there, on that we are required to calculate the short-term capital gain, ma. Format should start with the yes, ma, gross consideration minus transfer expenses we have to reduce. Then you can get the what, ma? Net consideration. So please remember, whatever the gross consideration is there, from that please reduce that what, ma? transfer expenses, then you can get the what ma net consideration. From that net consideration, please reduce the cost of acquisition as well as the cost of improvement. Cost of acquisition as well as what ma cost of improvement. Yes. Finally, you will get that what ma gross short term capital gain. Finally, you will get what ma gross short term capital gain. Gross short term capital gain. Then please reduce that what ma exemptions. Then you will get what ma net short term capital gain. Then you will get what ma net short term capital gain. So please remember, whatever that amounts you have in your problem, all the things you have to substitute it in this format only. First, gross consideration. From that gross consideration, transfer expenses. Then you will get net consideration. From the cost of acquisition, cost of improvement. If you are removed, then you will get the gross short-term capital gain. From that, you can reduce the exemptions related amount. I will tell you what do you mean by that exemptions also. Then you will get what ma net short-term capital gain. Next, if you are observing that, if you haven't that what ma long-term capital asset, on that we are required to calculate the long-term capital gain. We are required to calculate what ma long-term capital gain. Yes, same format, but instead of the yes ma cost of acquisition, we have to substitute indexed cost of acquisition. What do you mean by the indexation also? I will tell you. And next, instead of the indexed cost of cost of improvement, we have to substitute what ma indexed cost of improvement also. What is that ma indexed cost of what ma improvement also. Next thing, if you are observing that, yes ma, first okay, format gross consideration minus transfer expenses net consideration minus indexed cost of acquisition, indexed cost of improvement, then you will get the gross long term capital gain minus exemptions, you can get that what ma net long term capital gain. Next important point, under section 50, if any depreciable capital asset is there, on that always we can get the short term capital gain only. Please remember, under section 50, always we can get the what ma short term capital gain only. There is no case of long term capital gain here. If any depreciable capital asset is there, that is an always treated as short term capital asset. On that always we can get the what ma short term capital gain. Always we can get the what ma short term capital gain. So please refer the format. Here we have in some format, we have to know about this format very well. Gross consideration minus transfer expenses net consideration. But here cost of acquisition, instead of that we have to take these two things ma, opening WDV plus cost of additions. Opening WDV plus what ma cost of additions we have to take. Opening WDV and the cost of additions, if you are remove this, then you will get what ma gross short term capital gain. From that gross short term capital gain, we have to remove that what ma exemptions. Then you can get the what ma net short term capital gain. Then we can get the what ma net short term capital gain. Are you clear ma up to now? If you are observing that, what is the change here ma? Yes, only cost of acquisition, only that portion we have to change. In case of section 48, that is on what ma non-depreciable capital asset. In case of section 48, what is that ma non-depreciable capital asset. Yes, short-term capital gain calculation, we have to place the what ma cost of acquisition, cost of improvement. Here indexed cost of acquisition, indexed cost of improvement. Here opening WDV plus cost of addition is taken as a cost. Are you clear ma? This is a format. How to apply this format in case of problems also I will tell you. So this is only the format you should remember while doing that all the problems ma. So next, what are the things we are going to discuss ma? First we will discuss the gross consideration, transfer expenses, next cost of acquisition, next indexed improvement, next indexed cost of acquisition, indexed cost of improvement. All the things we will discuss one by one, including the exemptions also. This is on chapter flow. So this is a format we have to follow for doing the problems. In this format, what are the contents are there, we will discuss one by one ma. First we will discuss about the transfer expenses. What do you mean by the transfer expenses? Can you tell me transfer expenses always we should reduce from the gross consideration in order to arrive the what ma net consideration. Transfer expenses means any expenditure incurred related to transfer of capital asset. Incurred related to transfer of capital asset is called as on what ma transfer expenses. is called as what ma? Transfer expenses. Please remember, whatever that amount of an expenses incurred related to transfer of capital asset, that is only called as what ma? Transfer expenses. Example, brokerage, commission, stamp duty charges, etc. These are all are treated as an transfer expenses only. While you are calculating the capital gain, it should be reduced from the gross consideration. But please remember, whatever the security transaction tax you are paid, that is only called as what ma? STT. While you are paying that, why you are paying the STT ma? If any shares are yes ma purchasing as well as selling through the recognized stock exchanges, definitely we have to pay the some percentage of the security transaction tax ma. That is not treated as an transfer expenses. Very, very, very important point. Brokerage as well as the commission, stamp duty, all the things are treated as an what ma? Transfer expenses only, but security transaction tax is not treated as an transfer expenses. It should not reduce it from the gross consideration while calculating the net consideration. Are you clear ma up to now? Next we have to discuss about the cost of acquisition concept ma. Can you tell me what do you mean by the cost of acquisition? First of all the things we will discuss in this. Why we need to learn this concept of cost of acquisition? Because while you are calculating the capital gain, in case of short term capital gain, we have to reduce the cost of acquisition from the net consideration. In case of long term capital gain, we have to reduce it that what my indexed cost of acquisition. First we will discuss the cost of acquisition, then after we can go for that what my indexation also. So please listen the concept of cost of acquisition ma. So right now I am discussing the cost of acquisition in case of what my tangible assets only. I'm not talking about the intangible asset right now. I'm talking about the cost of acquisition in case of tangible asset. First, if you are observing the in case of direct ownership, that means what I am acquiring that asset directly from the other person. Yes, in case ESMA cost of acquisition, in this case cost of acquisition is equal to cost to the whom SSE. Whatever that amount I paid for the purchase of the asset, that is only the cost for me. That is only cost of acquisition. Here, if any asset is purchased before 1/4/2001, if any acquisition is done by the SSE before 1/4/2001, here cost of acquisition is actual cost or FMB as on 1/4/2001, whichever is what ma higher. That means they are given the FMB benefit. That means the actual cost or fair market value as on 1/4/2001, whichever is higher, you can take it as on what ma cost. This is only called as an FMB benefit. Next, if any acquisition is done on or after 1/4/2001, there is no FMB benefit ma, actual cost only you can take directly it as an what ma cost of acquisition. Next, if you are observing about the indirect ownership, that means asset is not acquired by the SSE directly. If any asset is acquired by the SSE under section 49 subsection 1 modes, I think you know 49 1 modes means nothing but if any asset is acquired by way of gift, will, inheritance, irrevocable trust, amalgamation, demerger, etc. In this situation, can you tell me, we are not purchasing that asset directly, we are acquiring that asset from any other person by way of gift, will, inheritance, etc. So that's why cost of acquisition is nothing but what my cost to previous owner. Here also we want to give that indexation benefit to the previous owner also. If any asset is acquired before 1/4/2001, if any asset is acquired before 1/4/2001, actual cost are FMB as on 1/4/2001, whichever is higher, that is only we have to take it as a cost. That means if you purchase that asset before 1/4/2001, or if your previous owner purchased that asset before 1/4/2001 also, we can take that what ma indexation benefit. If any asset is purchased by the previous owner on or after 1/4/2001, cost of acquisition is taken as on what ma actual cost only. Yes, that means if any asset you or your previous owner purchased before 1/4/2001, we can take the FMB benefit. What do you mean by the FMB benefit ma? Actual cost or fair market value as on 1/4/2001, whichever is higher. Very, very important point ma. FMB benefit as on 1/4/2001 is not applicable to intangible capital asset. That means only for the tangible capital asset only. Yes ma, we have an 1/4/2001 benefit. For intangible asset, this 1/4/2001 benefit is not applicable. How to calculate the cost of acquisition in case of bonus shares? Shall we start ma? Yes. How to calculate the cost of acquisition of the bonus shares ma? If bonus shares are allotted before 1/4/2001, definitely actual cost or FMV as on 1/4/2001, whichever is higher. So automatically actual cost for the bonus shares is 0. Whichever is higher is what ma? FMV as on 1/4/2001 only. Whichever is what ma? Higher. Next, if any bonus shares are allotted on or after 1/4/2001, then cost of acquisition of that bonus shares is nothing but actual cost. Actual cost means nothing but what ma? 0 only. Are you clear ma? So this is only the 2 points you should remember while you are calculating the capital gain in case of what ma? Tangible asset. What is the cost of acquisition? We have to take ma? Actual cost. But yes ma, if any asset is acquired before 1/4/2001, we can give that FMV benefit. Sir, if you are indirectly acquiring that asset by using the section 49(1) modes, definitely cost to previous owner you should take. But if any previous owner purchased that asset before 1/4/2001, we can take that what ma? FMV benefit as on 1/4/2001 to that previous owner also. Can you tell me FMV benefit as on 1/4/2001 is applicable to intangible asset? No. Cost of acquisition of bonus shares. If any bonus shares are purchased before 1/4/2001, FMV as on 1/4/2001 only cost of acquisition. On or after 1/4/2001, yes ma, cost of acquisition should be taken as on what ma? Nil. Are you clear ma up to now? Yes. FMV benefit on 1/4/2001. FMV benefit as on 1/4/2001 we will discuss ma. Can you tell me when you can take the FMV benefit ma? If any asset is acquired before 1/4/2001, definitely we can get that what ma? FMV benefit as on 1/4/2001. If any asset is acquired on or after 1/4/2001, cost of acquisition directly we can take it as on what ma? Actual cost. But if you are acquiring that any asset before 1/4/2001, in case of movable, very very important, in case of movable asset, cost of acquisition is equal to actual cost or FMV as on 1/4/2001, whichever is higher. But in case of immovable properties, we have to follow the actual cost, FMV as on 1/4/2001 as well as SDV as on 1/4/2001. First, please check it out the FMV as well as SDV as on 1/4/2001, whichever is higher, that amount should be compared with the actual cost, whichever is what ma? Higher. So nothing but in case of immovable property, how you can take the FMV benefit as on 1/4/2001 ma? Please remember how we can take the FMV benefit as on 1/4/2001 in case of immovable properties. Please compare the actual cost. And the second point, FMV SDV, please compare whichever is lower you should take that lower amount you should compare with the actual cost, then you will get that what ma? Immovable property related FMV benefit as on 1/4/2001. Can you tell me when you can take the FMV benefit as on 1/4/2001 ma? If any asset was acquired before 1/4/2001. Can you tell me what are the cases covered under section 49(1) mode ma? So nothing but what ma? Total partition or partial partition of HF, gift, will, inheritance, any asset distributed on liquidation of a company, irrevocable trust or irrevocable transfer, if any capital asset transferred by the holding to subsidiary, subsidiary to holding. So I think you know that conditions. First condition is nothing but what ma? So 100% subsidiary as well as holding relationship must be in existence. Next, yes ma, recipient company must be Indian company. Next, amalgamation, demerger, yes ma, this is an clubbing provisions related. Already we have covered. Self-acquired property is converted into self-acquired property is converted into what ma? Joint property. So these are all the cases are covered under section 49(1). I think many cases we are referred. If anything is covered under section 49(1), yes ma, period of holding includes the previous owner holding period. Cost of acquisition, cost of acquisition we should take it as an what ma? Cost to previous owner. These are all the points we are discussed. But please remember FMB benefit as on 1/4/2001, very very important in an examination. Definitely this FMB value as on 1/4/2001 they will give you in an examination ma. But in case of immovable properties, not FMB, always we have to consider the what ma? SDV also. First we should restrict the what ma? Whichever is lower, then we have to compare with the what ma? Whichever is higher. Are you clear ma up to now? This is all about the cost of acquisition in case of what ma? Tangible only. Cost of acquisition in case of what ma? Tangible only. Next, we have to know about the cost of acquisition under section 55 in case of what ma? Intangible asset. So as of now, we are discussing the provisions relating to cost of acquisition in case of tangible. Right now, we will discuss about the what ma? Intangible. Can you tell me goodwill of a business or profession, trademarks, as well as what ma? Brand name of business or profession, right to manufacture, right to produce, right to process of any article or thing, traditional copyrights, as well as what ma? Patents, right to carry any business or profession, route permits, etc. These are all are intangible capital asset. Intangible capital asset related cost of acquisition we can discuss under section 55. So tangible 49. So tangible capital asset related cost of acquisition we will discuss under section what ma? 49. Yes. Next, intangible related ma? Section 55. 55. Section 55. Can you tell me what is the cost of acquisition in case of intangible ma? So please remember, if that intangible capital asset are self-generated, the cost of acquisition will be taken as nil. If that if these assets are purchased asset, cost of acquisition is nothing but what ma? Actual cost. Can you tell me in case of intangible capital asset, FMB benefit as on 1/4/2001 is applicable? 1/4/2001 benefit is not applicable in case of intangible capital asset. Please remember. Are you clear ma up to now? Yes. Please remember, intangible assets related cost of acquisition, if that is a self-generated, nil. If that is a purchased, we should take that what ma actual cost as an what ma cost of acquisition for computing the capital gain. Are you clear? After completion of cost of acquisition discussion, we need to start with the what ma cost of improvement. Why we need to discuss the cost of improvement? Because while calculating the short-term capital gain, we have to reduce the cost of acquisition as well as the cost of improvement from the net consideration in order to calculate the what ma short-term capital gain. What do you mean by the cost of improvement? Simply, we are purchased one property, but we are doing some improvements. What is the cost of that improvements? Yes, cost of improvements means nothing but what ma clearly they are given. It should be a capital expenditure incurred by the SSE or by his previous owner. It must be incurred before 1/4/2001. If any improvement is done before 1/4/2001, that is only you can, before 1/4/2001, that you should be ignored. On or after 1/4/2001, that only taken as an what ma cost of improvement. Can you tell me that expenditure must be incurred, that capital expenditure must be incurred for the purpose of what ma improvement of the capital asset. So for example, I will tell you, in 1990-91, you are purchased one property for 5 lakhs. Can you tell me improvement 1 you are done on 95-96, that is an ignored, because yes ma, on 1/4/2001 itself we are already included this value. So that's why if any improvement is done 1/4/2001 on or after, that is only considered as an what ma cost of improvement. If any improvement is done before 1/4/2001, that should be ignored. So please remember, revenue expenditure cannot be considered as an cost of improvement. Only capital expenditure can be considered as an what ma cost of improvement. That also should be incurred on or after 1/4/2001. Improvement, that expenditure must be incurred in order to improve that such capital asset. Yes. Next one, cost of improvement is not available in these cases ma. Can you tell me what are that cases ma? Goodwill, yes ma, right to manufacture, right to produce, right to process of any article, right to carry the business or provision. That means for intangible capital asset, there is no cost of improvement. Please remember, always we should take this cost of improvement as an what ma 0. Are you clear? Next, indexation facility is available to the cost of improvement if that capital asset is an what ma long-term capital asset. Definitely cost of acquisition, indexed cost of acquisition. Improvement, indexed cost of improvement. Indexation facility is available only if that capital asset is an what ma long-term capital asset. So next discussion, I think you know already how to calculate the capital gain. In case of short-term capital gain, we can reduce the what ma cost of acquisition, cost of improvement from the net consideration. While in case of long-term capital gain, you should reduce the indexed cost of acquisition, indexed cost of improvement. That's why right now we will discuss the indexation benefit. Shall we start the indexation benefit ma? Yes. Yes. Just example I want to tell you. In 2004-5, you are acquired the one property for that what ma 6 lakhs amount. In 2015-16, you are done one improvement, that is a cost of what ma 3 lakh. What is the cost of that improvement ma 3 lakh? Can you tell me that asset is sold in 2023-24? If you want to calculate the capital gain, definitely you have to calculate the capital gain by way of taking the sale consideration. Can you tell me this is a long-term capital gain or short-term capital gain ma? Definitely this is a long-term capital gain. How you can understood ma? Because yes ma, period of holding start from the 4-5 to 2023-24. This is simply example taken as a building for yes ma, we have to check it out the 24 months. More than 24 months is there. That's why this is a long-term capital asset. Can you tell me how to calculate the capital gain ma? Yes, sale consideration we have to take. Can you tell me what is the sale consideration amount you can take ma? 25 lakh. From that, no need to take the cost of acquisition. Why? Because you are taken the sale consideration as a present market value, but you are taken the earlier years low amount as a cost of acquisition. That is an unfair. So that's why we have to consider the indexed cost of acquisition, indexed cost of improvement. Can you tell me what do you mean by the indexation? Yes, please take it as the cost. Can you tell me what is that cost ma 6 lakh? For that, yes ma, the government always will release the cost inflation indexation factors for that every previous year that already provided to you. Yes ma, please observe, base year is a 2001 to 2002, present year 2023-24, that is in what ma cost inflation indexation factor 348, this is in what ma 100. Yes, in an examination, definitely they will provide you cost inflation indexation factors, ma. Cost inflation indexation factors, definitely they will provide you. So please take, please take. Yes. Can you tell me what is that? Yes, ma. In above, that means in the ratio, above you have to take the transfer year CII. Can you tell me transfer year CII is nothing but what ma 348 divided by in the year of purchase, what is the CII ma 113. So please take the multiplication 6 lakh into 348 divided by 113. Definitely instead of the 6 lakh you are taking the indexed cost of acquisition, that's why 18 lakh 47,788 you can take it as an what ma cost of acquisition. Like that only you have to take that improvement ma. Improvement is happened in which year ma? Implementation happened in which year ma? Can you tell me implementation happened in the year 15-16? So that's why transfer year is nothing but ratio above and below is nothing but improvement done here. So that's why instead of 3 lakh indexed cost of improvement you need to take, that is an 4 lakh 11,024. This is a long term capital gain, that is nothing but what ma 2 lakh 41,000. CIA means what ma? Cost inflation index. Definitely in an examination they will mention you what is the cost inflation index for the relevant years. Definitely they will give you ma. So please make an observation, please make an observation while you are calculating the capital gain. While you are calculating the capital gain, if the capital asset is a long term capital asset, definitely you have to consider the indexation. For calculating that indexation, we need to use the cost inflation indexation factors. Yes ma. Improvement also we have to do that indexation. Cost of acquisition also we have to do that what ma indexation. Can you tell me what is that benefit ma? Yes, definitely this is an indexation benefit only, because if there is no indexation we have to take the cost as an 6 lakhs and improvement as an 3 lakhs. Because of indexation we are taken the 18 lakh change as well as 4 lakhs change. So that's why this is an always calling as an indexation what ma benefit. Next, one more thing I want to tell you, indexation facility is an available only for that which asset ma long term capital asset only, not for short term capital asset. Indexation facility is an available only to that what ma long term capital asset, not for short term capital asset. Yes, just I made a formula for this ma. Yes, can you tell me what is that cost of acquisition into cost inflation index in the year of transfer, cost inflation index in the year of transfer divided by cost inflation index in the year of what ma purchase. If that asset is purchased as on 1/4/2001, exactly on that year, can you tell me exactly on that year what is that base we have to take ma 100? Yes ma. Before 1/4/2001 if any asset purchased also, in denominator we have to take what ma 100 only. Next, cost of improvement is equal to, yes ma, improvement done year. Yes ma, improvement done year we have to take it as an what ma denominator. Transfer year always we have to take it in that what ma numerator. But please remember, even though that is a long term capital asset also, in the following cases we can't get that indexation benefit ma. Short term capital asset, no indexation. Non-resident also no indexation. Depreciable capital asset, capital gain we have to compute under section 50, no indexation. If you are observing the format of a calculation of capital gain under section 50 also, we are not getting any indexation benefit ma. Next, slum sale we will discuss in future, debentures as well as bonds. Yes ma. Next, I think we are already covered this section 50 AA. What is that ma? Units of specified mutual funds as well as market linked debentures. In these two cases we can't get that what ma indexation. Previous owner holding period also we can't get that indexation. Long term capital gain under section 112A also, in all the cases we can't calculate that indexation. Please remember, short term capital gain, non-resident, depreciable capital assets on section 50, slum sale, debentures, bonds, previous owner holding period, yes ma, long term capital asset under section 112A, units of specified mutual fund, market linked debentures. In all the cases we can't get that what ma indexation. So please make an observation, if any asset is purchased before 1/4/2001, what is that cost inflation indexation factor we have to take ma, that is an base amount, that is an 100 we have to take. Indexation facility is not available to the bonds as well as debentures ma, but for these two bonds we can take that indexation, that is an capital indexed bonds as well as what ma sovereign gold bonds. So for all the remaining bonds there is no indexation ma, but indexation facility is available only for the two bonds, that is an what ma capital indexed bonds as well as what ma sovereign gold bonds. Yes, normally for the previous owner holding period there is no indexation as per that Income Tax Act 1961, but as per that one case law we can take that indexation facility also for the previous owner. Yes, I will tell you one example ma. 2004-5 father purchased the property ma. Yes ma, in 2009-10 son acquired the property. In 20 to 23 son sold the property ma. Can you tell me indexation facility as per income tax only? As per income tax act we can take that indexation from the, yes ma, indexation facility from the, as per income tax act 1961. As per that income tax act 1961 we can take that indexation from this year to this year only. But as per that Manjula Jesa case law, previous year owner, previous owner holding period, can you tell me this is also what ma previous owner holding period? For this also we can take that what ma indexation as per that what ma case law, as per what case law. Clear? Yes, you have to make an observation. Indexation facility very very important in an examination. Definitely you need to apply that indexation concept ma. Can you tell me indexation is a benefit? Yes, benefit only because of indexation we can take that more amount as a cost while you are calculating the what ma capital gain. But please observe, in the following cases we can't take that what ma indexation. Indexation facility is not available on bonds. But these two types of bonds, definitely we can take that indexation. What are the bonds ma? Capital indexed bonds as well as what ma sovereign gold bonds. Are you clear? Yes. So indexation facility is over. Definitely these are all the factors will given in that examination. No need to bother about it ma. But what is that base year ma? 2001 to what is that present year ma? 2023-24. What is that cost inflation indexation factor ma? 348. Are you clear? Yes. Next we need to start our discussion with the section 45 series. Already section 45 subsection 1 charging section is on over. Next we have to discuss the three sections in the 45 series. The first one 45 subsection 1a, 45 subsection 2, 45 subsection 5. 45 subsection 1a, 45 subsection 2, 45 subsection 5. These three are very very important. On any concept we can get one independent question also, that's why. So please listen carefully. Section 45 subsection 1a is nothing but what ma computation of capital gain in case of damage or destruction of what ma capital asset. There is a general procedure for calculating the capital gain under section 48 or section 50. In case of non-depreciable capital asset section 48, in case of depreciable capital asset section 50 is there. But please remember, if you want to calculate the capital gain in case of damage or destruction of the capital asset separately, we have to follow section 45 subsection 1a. Yes, capital gain in case of damage or destruction of which capital asset ma? Insured capital asset. Insured capital asset. I will tell you one example. In 2009-10, you are purchased one capital asset, that may be plant and machinery, and that you are already taken an insurance policy. In 2018-19, that is damaged or destructed, yes, damaged or destructed, maybe due to natural calamities, the fire, earthquake, tsunami, yes. Next, in 2023-24, insurance company is given the insurance compensation with regarding that asset. So damage or destruction related to what ma? Flood, tufan, hurricane, esma, cyclone, earthquake, right, or civil disturbances, accidental fire or explosion, esma, action of enemy. That means what ma? Without war or with or. So because of these reasons, if any capital asset is damaged or destructed, can you tell me damaged or destructed only called as what ma? Transfer under extinguishment. If you remember, right is also cancelled, asset is also destructed. That's why this is covered under extinguishment. In 18-19, that is in itself considered as a transfer. But in the transfer year, we are unable to calculate the capital gain. What is the reason? Because we don't have any consideration for that capital asset. That's why capital gain needs to be computed in the year of compensation received. So that's why always section 45 subsection 1 says the capital gain you have to calculate in the year of what ma? Transfer. Capital gain you have to calculate in the year of transfer. But in this situation, this is an exception to what ma? Method of accounting. Here we are required to calculate the capital gain in the year of insurance compensation received. That is only called as what ma? Exception to the method of accounting. Okay. While you are calculating the capital gain, can you tell me what is the period of holding ma? Period of holding should start from the, yes ma, purchase to destruction. That means year of transfer. Indexation also from the purchase year to the transfer year we have to calculate the indexation. So this is only that point ma, very very important. While you are calculating the capital gain in case of damage or destruction of insured capital asset, If there is no insurance, we cannot calculate the capital gain. There is no consideration also. So that's why please remember, yes, 45 subsection 1A is over. Next, we have to start very, very important, 45 subsection 2, capital gain in case of conversion of capital asset into what, stock in trade. Yes, this is also special case, Remember, yes, we haven't one capital asset that isn't purchased in 2009-10 for 45 lakh, but in order to do the business, we are converted that capital asset into stock in trade in our business on 2021. As on the date, fair market value of that capital asset is 2 crore. That means 2 crores worth of capital asset you are converted into stock in trade for your business or profession purpose. So this is only called as what, year of transfer. I think you know transfer includes ESMA compulsory, transfer includes the conversion of capital asset also into stock in trade. That is also treated as what, transfer. Next, can you tell me in the year 23-24 we are selling it stock in trade for that how much amount, 5 crore. In that, in the year of sale of stock in trade, we have to calculate the, in the year of sale of stock in trade, we are required to calculate the, yes we are required to calculate the two heads of income, first one capital gain, second one PCBP. Why we are required to calculate the capital gain, we are converted that capital asset into stock in trade in the 2021 only, but we able to receive the some amount of that consideration on that conversion on the 23-24 only. So that's why in the year 23-24 we are required to calculate the capital gain, as well as stock in trade sold during the previous year 23-24. So that's why we are required to calculate the PCBP also. So these are only called as an what, exception to the method of accounting. Why? Section 45 subsection 1 says you have to calculate all the things in the year of transfer, but in the year of transfer we are not received that any consideration. That's why we are postpone the calculation to the ESMA sale of stock in trade year. Sale of stock in trade year. Are you clear, Yes. How to calculate the capital gain and PCBP in the year of sale of stock in trade? Yes, just we will discuss, whatever the sale consideration you are received, that is nothing but what, sale consideration is nothing but fair market value as on the date of conversion of the capital asset into stock in trade. Can you tell me how much amount of the fair market value, that much of value asset you are converted into stock in trade in our business? That is only consideration. Minus, we have to reduce the cost of acquisition and indexed cost of acquisition. If that is a long term capital asset, you have to take the indexed cost of acquisition. If that is a short term capital asset, we have to take only cost of acquisition. Next, how to calculate the PCBP, sale consideration of the stock in trade for how much we are selling the total stock in trade, 5 crores, minus whatever that sale consideration you are taken that for computing the capital gain, that is only the cost, because that much of capital asset you are converted as an stock in trade. So that means what, that is only that cost, the 2 crores only you want to take it as an what, cost. Sale price minus cost, that is only PCBP. PCBP is also arises in the year of sale of stock in trade. For computing the PCBP, what is the cost you have to take, cost is nothing but fair market value as on the date of conversion of the capital asset into stock in trade. If any non-capital asset is converted into stock in trade, sir, here the capital asset is converted into stock in trade. If non-capital asset is converted into stock in trade, no need to calculate the what, capital gain. If any capital asset isn't converted into stock in trade, here we have to calculate the what, capital gain. Very, very, very important point. You should remember. Yes, on this maybe you can get the number of problems in your examination, every year. Yes, 45 subsection 2 isn't important. Can you tell me this is an exception to the charging section? Yes. Normally in the year of transfer, you are required to calculate the capital gain. We are postpone that calculation to the year of sale of stock in trade. In the year of sale of stock in trade, we are required to calculate the two heads of income. One is on capital gain, another one is nothing but what, PCBP. Next section 45 subsection 5. Yes, capital gain in case of compulsory acquisition of what, capital asset. So here we are required to know about these details, first one, 9-10 we are purchased one capital asset in 2018-19, that is an compulsorily acquired. Compulsorily acquired is treated as what, transfer only. What is the transfer year, 2018-19? But compulsory acquisition related compensation given by the government or any other party on the 2023-24. So we are unable to calculate the capital gain in the year of transfer, but we can calculate the capital gain in the year of what, compensation received. In the year of what, compensation received. Can you tell me? So in this situation, this isn't treated as on what my exception to the method of accounting. So that means normally we are required to calculate the capital gain in the year of transfer, but here we are unable to calculate the capital gain. So that's why, yes ma, in the year of receipt of compensation, we can calculate the capital gain. That's why this is called as an exception to the what ma method of accounting. But period of holding, we want to take for the from the what ma purchase to transfer year. Indexation also we want to take from the purchase year to what ma transfer year only. If any compensation is received in installment basis, entire compensation amount is 10 lakh, but entire compensation is received in the 5 equal annual installments. That means what ma 5 lakh, 2 lakh, 2 lakh, 2 lakh, 2 lakh, like 5 years we are received. But if any compensation is received in installment basis, total compensation is taxable in the year of receipt of what ma first installment only. So that means in the 23-24 only, the sale consideration we have to take that as an 10 lakh minus indexed cost of acquisition, example 2 lakhs. Then this is a long term capital gain, that is on what ma 8 lakh. Please remember, yes, if any compensation is received in installment basis, then entire compensation is taxable in the year of receipt of what ma first installments only. So we are received the 10 lakh compensation, that is not ESMA satisfied by the SSE. That's why he is filed a case against the ESMA who are acquired that property in the court of law. In this situation, they are given the enhanced or additional compensation 3 lakhs. This is also taxable under the head capital gain. Sale consideration 3 lakh. Cost of acquisition or indexed cost of acquisition, we want to take it as a nil because we are already taken the cost of acquisition as well as indexed cost of acquisition while calculating the capital gain in case of what my initial compensation itself. But you can take the deduction of what my legal expenses. Finally, yes ma, this is also a long term capital gain because we are transferring the one long term capital asset, on that we are receiving the initial compensation, that is a long term capital gain, and enhanced or additional compensation also long term capital gain only. If compensation is received on installment basis, then can you tell me, if compensation is received on installment basis, then entire compensation is taxable in the year of receipt of what ma first installment only. Enhanced compensation or additional compensation is taxable in the year of receipt of what ma such compensation. That means whenever you are receiving that enhanced compensation, that is taxable under the head capital gain. Cost of acquisition as well as indexed cost of acquisition, you have to take it indexed cost of improvement as well as cost of improvement. Indexed cost of acquisition, cost of acquisition always should be taken as zero. Yes, we can take the only legal expenditure as a deduction. Yes, but very important point for an MCQ, please remember. Sir, if compensations are received with respect to the capital asset, that is taxable under the head capital gain. But if any interest on such compensations are received, that interest on such compensations are always taxable under the income from other sources only. So please remember, if any compensation received, that is in capital gains after taxability we have to give. But if any interest on such compensations are received, that is taxable under the head income from other sources. Whenever if any interim compensation is received, that means what ma? So initially court want to give the some relief to that yes ma person who are involving in the compulsory acquisition, but okay, that is only called as what ma interim compensation. But interim compensation is not taxable in the year of receipt ma. Interim compensation is taxable in the year of receipt of what ma final order, ultimate order given by the court after 10 years or after 20 years or whatever it may be. In that year only that interim compensation should be taxable. So please remember, these three are very important in the special cases under section 45 series ma. 45 subsection 1A capital gain in case of damage or destruction of capital asset. Section 45 subsection 2 capital gain in case of conversion of capital asset into stock in trade. 45 subsection 5 capital gain in case of compulsory acquisition of what mark capital asset. These three things please refer before going to that examination on this. Maybe you can get that what mark one independent question also in an exam. Next, section 50. What is the section 50? Capital gain on depreciable capital asset. I think you know non-depreciable capital asset related section 48. Non-depreciable capital asset related capital gain computation format we are already discussed under section 48. Right now, if any depreciable capital asset is there, how to calculate the capital gain? So first we have to discuss about the depreciation concept before going to section 50. Because the depreciable capital asset, that's why we need to discuss about the depreciation concept in a just a normal manner. In PGBP chapter, we will discuss all the things in detailed manner. Okay. So methods of depreciation, I think you know, we haven't what ma WDV as well as what ma SLM is there. Yes ma. For all the SSEs, mandatory to follow that what ma WDV only. But for power sector undertaking company, they are the given that option. Either they can follow that what ma SLM or they can follow that what ma WDV also. Normal SSEs definitely they need to follow that what my WDV method only for calculating the depreciation. But if that is an power sector undertaking company, yes, they can follow that what my WDV method as well as SLM. Next, next, I think you know how we are classifying the assets. How we are classifying the asset, that is only called as what my nature of assets. So if you are observing that, yes ma, assets in our organization we can classify into tangible as well as what ma intangible. Tangible further can be classified into, yes ma, building, yes ma, building, furniture, as well as what ma plant and machinery, as well as what ma intangible. That means further we can classify all the things into what ma four categories: building, furniture, plant and machinery, intangible. Just if you are observing that what are the rates of depreciation for the building, we have in three rates are there: 5%, 10%, 40%. I will tell you, so depreciation rates also in detailed manner in PCBP chapter. Just refer. Yes ma, general rate for the buildings is nothing but 10%, furniture always 10%, plant and machinery is residuary. Whenever there is no place in any category, that means building, plant and machinery, building, furniture and intangible asset, there is no place for any asset that having the place in the plant and machinery. That means miscellaneous assets are always classified into plant and machinery. So nothing but what is a general rate for that plant and machinery? 15, normally 20%, 30%, 45% is also there. Intangible assets rate of depreciation is nothing but what ma 25%. So if you are observing that, we are already discussed the nature of capital as nature of assets as well as what ma rates of depreciation also. Assets should be categorized into blocks for in order to provide the depreciation. If you want to calculate the depreciation, all the assets must be converted into what ma blocks. So how to classify the blocks ma? If any assets having the similar nature, I think you know what do you mean by the nature ma? For building, furniture, plant and machinery, intangible. Building, furniture, plant and machinery, intangible. And if they're having the same rate of depreciation also, that all the things are classified into what ma? Similar block. Similar block. What is the thing ma? So please remember, if they're having the similar nature and the same rate of depreciation, if they're having the what ma? Similar nature and they're having the what ma? Same rate of depreciation, all the things should be classified into what ma? One block. So one example I am given, please refer this example how we are classifying that all the assets into blocks. So please remember what is the rule ma? If any asset having the similar nature and same rate of depreciation, that should be converted into what ma? One block, and on that we have to provide the depreciation by using that what ma? WDV method. Yes. Next. How to provide the depreciation? Suppose this is a WDV format for useful for calculating the depreciation. So please remember, we have in three blocks in our organization. Suppose as an example, we have in how many blocks in our example ma? Three blocks. Yes. Block 1, block 2, block 3. Block 1 is in plant and machinery 15%, block 2 is in plant and machinery 40%, block 3 is nothing but furniture at the rate of what ma? 10%. So always we should start with the opening WDV. Whenever you have an opening WDV, that means what ma? Old assets only. So the last year asset, what is that value we have? That is only opening WDV. So please concentrate only on block 1 ma. Only on block 1. Can you tell me what is that opening WDV ma? In opening WDV we have in 4 assets ma. That value of that asset is nothing but 40,000. 40,000. Cost of addition, that means we are purchased some asset during the previous year. How many assets we are purchased ma? 2 assets. That worth of 2 assets is 20,000. So always the cost of addition we should add it to that what ma? WDV. Opening WDV. Next, we are selling the some assets ma. How many assets we are sold ma? 6 assets we sold. For how much amount ma? 30,000 only. We are selling the 30,000 worth of asset. Yes ma, 30,000. Sorry, we are selling the 6 asset for 30,000. Can you tell me how many assets are in pending ma? 0. What is that value left in that block ma? 30,000. But we cannot provide the depreciation here. Why? There is no asset in your block. Because 4 assets initially you have, 2 assets you are purchased, 6 assets you are sold during the previous year. How many assets are existence in the block ma? No assets. That's why even though we have a value also, but there is no asset existence in that block. So that's why we are unable to calculate the depreciation. So normally if there is a value of an asset as well as if there is any asset in that organization, this is only called as what my depreciable value. On the depreciable value we have to apply such percentages. On that you can calculate the depreciation. If you are reducing the depreciation from the depreciable value, then you will get what my closing WDV. This closing WDV only opening WDV for the what my next year. Yes, next one. If you are observing that, next second block we have to take ma. Second block is nothing but what ma. Block 2 is nothing but plant and machinery at the rate of 40%. So how many assets we have in our organization? 4 assets. That value of that asset is nothing but 40,000. Next 2 assets we are purchased, that is in 20,000. So we are selling only 2 assets ma. So can you tell me how many assets are still in the block ma? 4 assets, but we are selling it for the 70,000. Can you tell me what is that depreciable value you have? Negative, but you can't take the negative value here. That's why we should substitute it as a 0. Can you tell me here we can calculate depreciation? No. Why? Depreciable value is 0. So whenever you have an whenever you want to calculate the depreciation, you should do that. You should check the 2 conditions. Conditions for claiming the depreciation is nothing but what ma 2 condition. First condition nothing but what ma at least one asset must be in the block as on the last day of the previous year. And the second one, there must be some value in that block as on the last day of the previous year. At least one asset, there must be an value in that block. That value means nothing but positive value. If these 2 conditions are satisfied, definitely we can calculate the depreciation. But in these 2 cases, we are unable to calculate the depreciation because these conditions are what not satisfied. Yes. Next, what we need to do? If any or both the conditions are not satisfied, then section 32 is not applicable. What do you mean by the section 32 ma? Depreciation is not applicable. Then automatically what we need to do? Section 50 is applicable. Then resultant income is an always short-term capital gain as well as what ma? Short-term capital loss. So already you know, while you are calculating the capital gain under section 50, then resultant income is an always what ma? Short-term capital gain or short-term capital loss, because depreciable capital assets always treated as a short-term capital asset only. So in this situation, we are unable to calculate the capital gain. We are unable to calculate that what ma? Depreciation in these 2 cases. Automatically we need to calculate the capital gain. Because that asset, that block of assets are not existence in our business. That's why we need to calculate the what ma? Capital gain. So that's why we can frame one sentence ma. These 2 are mutually exclusive. If you are calculating the depreciation, no calculation of capital gain. If you are unable to calculate the depreciation, we are required to calculate the capital gain. Okay. Already you know how to calculate the capital gain. Yes ma. Under section 50, we have to take the sale consideration. Can you tell me what is the sale consideration in case of block 1 ma? 30,000. Block 2 ma? 70,000. 30,000 as well as 70,000. Please take it out. Minus cost of acquisition is nothing but what ma? Opening WDV plus cost of addition only. We have to take it as on what ma? Cost of acquisition in case of section 50. That is an capital gain in case of depreciable capital asset. What is that ma? We have to take that what ma? Opening WDV plus cost of additions. So can you tell me opening WDV plus cost of addition in case of block 1 is 60,000. In case of block 2 is also 60,000. That's why short-term capital loss in case of block 1. Short-term capital gain in case of what ma? Block 2. So that is only that ma. Section 50 as well as section 32, these 2 things are mutually exclusive. Section 32 is unapplicable. Yes, always we are required to calculate the what ma? Depreciation under the head PCBP. Indexation facility is not available. Indexation facility is not available because already you know that format. Yes ma. Gross consideration minus transfer expenses, net consideration minus opening WDV minus cost of additions. Then you can get that what ma? Gross short-term capital gain or gross short-term capital loss minus if you are removing the exemption, then you will get the net short-term capital gain or net short-term capital loss. Are you clear? What do you mean by the depreciable asset ma? Depreciable asset means if any asset is used in the business or profession of an associate, that is only called as what ma? Depreciable asset. So final analysis or summary of the what ma? Section 48 as well as section 50. So can you tell me section 48 is a depreciable or non-depreciable? Non-depreciable capital asset. Cost you have to take in case of short-term capital asset, cost of acquisition, long-term capital asset, indexed. Resultant income, short-term capital asset. If you are calculating the capital gain on short-term capital asset, short-term capital gain or short-term capital loss. But in case of long-term capital asset, long-term capital gain or long-term capital loss. Next, if you are observing section 50, that is an capital gain on depreciable capital asset. Yes, ma, cost is nothing but you have to take it as an opening WDV plus cost of additions. The resultant income always you should take it as on what, ma, short term capital gain or short term capital loss. Are you clear, ma, up to now? Are you clear, ma, up to now? This is a very, very important section. You should remember, while you are calculating the depreciable capital asset related capital gain, you have to follow the section 50 only. Section 50 and one more section is an interlinked, ma. What are the two sections are interlinked, ma? Section 32. If you are eligible to calculate the depreciation, yes, you are going with the calculation of depreciation only. If you are unable to calculate the depreciation, automatically you have to calculate the capital gain under section 50. Then resultant income is an always short-term capital gain or short-term capital loss. Are you clear, ma, up to now? Yes. Next, section 50AA, this is an amendment. We can expect some MCQs as well as a short answer type question also. So please refer. Computation of capital gain. Can you tell me in case of two assets, one is an specified mutual fund related units, second one market linked debentures. How to calculate the capital gain? First of all, if any transfer of these two things are happen, always you have to calculate the ESMA short term capital gain only, irrespective of the period of holding. These two things always treated as on what, ma, short term capital asset. Already we are discussed in the nature of capital asset as well as what, ma, ESMA nature of capital asset or types of capital asset. How we are required to compute the capital gain? Please remember, gross short term gross sale consideration minus transfer expenses, you can get the net consideration, and you have to reduce the cost of acquisition, then you will get the what, ma, gross short term capital gain or gross short term capital loss, minus if you are removing the exemption, net short term capital gain or net short term capital loss. No deduction with respect to that what, ma, STT. I think you know, if you are paying that any security transaction tax, on that there is no deduction with respect to that what, ma, security transaction tax as in transfer expenses. I think already in that transfer expenses point we are discussed, if any STT is paid on such a transfer also, we are not taken this as an what, ma, transfer expenses. Transfer expenses means brokerage, stamp brokerage as well as what, ma, stamp duty charges as well as the commission. These are all the things only can be considered as an what, ma, transfer expenses. Section 50A is a very, very important. Please refer before going to that examination, ma. Are you clear? Next, we have to refer section 50C also. Important, ma. Very, very important. Please listen carefully. Very, very important. Please listen carefully. In every exam, so if any 7 marks or 8 marks related capital gain question is there, definitely we have to apply section 50C also. In every examination question, we have to use the section 50C applicability, ma. That's why 50C. What is that 50C? Nothing but consideration in case of transfer of immovable property. If any immovable property is in transfer, definitely we have to calculate the capital gain. What is that consideration we have to take? So applicability, if you are observing that, applicability is an applicable only to that immovable properties being in capital asset, if that is a land or building or both. If any immovable property is transferred, what is that consideration we have to take? That's why this is an applicable only to the immovable properties being in capital asset, that is a land, building or both. What is that provision? Please remember, what is that provision? Yes. If that 110% of an actual consideration, what is that, ma? If 110% of actual consideration is less than stamp duty value, then we have to take that consideration as an what, ma? Stamp duty value only. So that means intentionally you are selling your property less than the stamp duty value. What do you mean with the stamp duty value? The government determined value. Less than that amount you are selling your property. So that's why we are required to calculate the capital gain by using that taken as a consideration as a stamp duty value only. Yes. Example I want to take, ma. Example I want to take. Actual consideration is 10 lakh. Yes, ma. Stamp duty value is 15 lakh. Can you calculate 110% of actual consideration means nothing but what, ma? 11 lakh. Still is a less than 15 lakh only. So that's why definitely we have to take that consideration as a stamp duty value for the purpose of computing that what, ma? Capital gain. But here SSE is arguing that, SC is arguing that, sir, in our locality, fair market value itself 12 lakh, but you are saying the government value as an 15 lakh. This is unfair. So that means nothing but what is that argument made by the SSE, ma? Stamp duty value is more than what, ma? Fair market value. In our locality, regular purchase and selling is done only for the 12 lakh only, but you are saying government value as an 15 lakhs. That is only that argument done by the SSE. Here, SC having the two remedies, ma. First remedy is nothing but he can make an appeal with the higher authorities. Then what is that consideration we have to take, ma? Value determined by the authorities. Value determined by the authorities. Second one, reference to the valuation officer. Can you tell me what do you mean by the reference to the valuation officer? Just we are making a request to the department. Yes, ma. Please refer these all the things to the valuation officer. That person is nothing but involving in the department only. Yes. Valuation officer is on valuing that property. Yes, what is our argument, ma? Fair market value only just 12 lakh, but you are giving it as an 15 lakh stamp duty value. This is an unfair. That type of an argument is done by the SSC. That's why in this case, the valuation officer is on refer. Actual consideration 10 lakh, fair market value 12 lakh, stamp duty value 15 lakh. This is an your argument. Yes, in this situation, fair market value valued by the valuation officer, that is an what, ma? 13 lakhs is there. In this situation, whose argument is an correct, ma? Stamp duty value is nothing but more than the what, ma? Fair market value. That means stamp duty value is more than the fair market value determined by the valuation officer. That means SC argument only correct here. So in this situation, consideration is nothing but we need to take the fair market value determined by the whom, ma? Valuation officer only, not 15 lakh. Only we have to take the consideration as an what, ma? 12 lakh here. Can you tell me normally what is that consideration we have to take? Stamp duty value only. But here SC is and argues that, sir, you are saying the 15 lakh as a stamp duty value, but in our locality the fair market value itself 12 lakhs. So that's why what is that consideration we have to take it out now? Only 13 lakh, because you are arguing as on 12 lakh, but valuation done by the valuation officer, it becomes about 13 lakhs. That's why this 13 lakh only taken as on consideration for the purpose of computing the capital gain. Okay. Maybe in second case. So actual consideration 10 lakh, fair market value 12 lakh, stamp duty value 15 lakh, is our argument only. The valuation officer determined that valuation is an 18 lakh. Can you tell me that fair market value is nothing but what, ma? More than the stamp duty value here. Who are winning the case, ma? Assessing officer only. Your argument is nothing but stamp duty value is more than fair market value. That is not at all correct. Stamp duty value is less than the what, ma? Fair market value. In this situation, what is the consideration we have to take, ma? Stamp duty value only. That means what is that, ma? Consideration we have to take it as an 15 lakh only for the purpose of calculating the what, ma? Capital gain. Are you clear, ma? Up to now? This is very, very, very important in case if any immovable property is transferred. If any immovable property is transferred, that immovable property 110% of actual consideration is less than the stamp duty value. Definitely we have to take the stamp duty value only as an what, ma? Consideration. Next. So case 1, just example, ma. Actual consideration, stamp duty value given. Actual consideration 110% of actual consideration is less than the what, ma? Stamp duty value. That's why 50C is an applicable here. What is that consideration we have to take, ma? SDV only. That is nothing but what, ma? Consideration is equal to SDV. That is nothing but what, ma? 13 lakh. Case 2, please take that. Yes, ma. 110% of actual consideration is not less than the what, ma? SDV. That's why 50C is not applicable. What is that consideration we have to take, ma? Actual consideration only. We have to take it as a consideration. That is nothing but what, ma? 10 lakh. Yes. Very, very important adjustment. One more adjustment, ma. Yes. In case of immovable property, if you are observing the date of agreement is nothing but what, ma? 12/1/2023. That means I want to sell the immovable property to you. Both the persons are entered into an agreement on 12/11/2023. So on the date, stamp duty value is 72 lakh. But the date of registration is a different, ma. Definitely, okay. On the date of agreement, impossible to get the registration with the registration authorities. That's why. So registration is on that 3/3/2024. On that day, stamp duty value is 96 lakh. Can you tell me actual consideration is 50 lakh, ma? We have to compare the 110% of actual consideration with the stamp duty value as on the date of agreement or as on the date of registration. So can you tell me, we have to compare the 110% of actual consideration with the stamp duty value because this is an immovable property is transferred. Can you tell me, we are required to compare the 110% of actual consideration with the stamp duty value or 110% of actual consideration with the stamp duty value as on the date of agreement or as on the date of registration? Yes, here date of agreement date stamp duty value only we have to consider if the following conditions are satisfied. That means agreement date stamp duty value only needs to be considered if the following conditions are satisfied. What are the following conditions, ma? Consideration must be received in the form part or full. It is received as on the date of agreement. So that means what, ma? As on the date of agreement, we have to receive that consideration, and that consideration also should be received in the account to pay check, account to pay demand draft, electronic clearing system, or any other electronic modes. So if you are observing that, this is a very, very important point, ma. In an examination, definitely they will give you the date of agreement related stamp duty value, date of registration date stamp duty value also. We are comparing with the date of agreement only if the following conditions are satisfied, otherwise date of registration. Are you clear up to now? So this is only nothing but what ma section 50C, very, very important for doing that what ma problems. Every attempt we have one adjustment related to 50C. What is that? Simple ma. 110% of actual consideration is less than the stamp duty value. We have to take the consideration as an SDV only. So many SSCs are required to, many SSCs are selling that what ma their properties for the less than their stamp duty value in order to avoid the tax. Suppose so you are capable to sold for the 15 lakh, but intentionally you are selling for the 10 lakh only. Normally you are receiving the 15 lakh, but in account you are receiving the 10 lakh in under the table or by way of block. So by way of nothing but what ma bribes or undisclosingly you are taking the what ma 1 more 5 lakh also. So that means as per the government records, so we are selling it for that only 10 lakhs. Intentionally they are doing these two things. That's why we have in section 50C. 50C always the favorable to whom a department only. You are trying to sell the property for the less than the stamp duty value. 110% of actual consideration is less than the stamp duty value. We have to take the consideration as on what ma stamp duty value. And the next, this argument is also important. If the fair market value and compared with the what ma stamp duty value. So SSC is argued that fair market value is less than the stamp duty value. Yes, here the two remedies is there. These two remedies are mutually exclusive. One thing is on you are opted, another thing is not possible. Are you clear? Yes. And one more thing, the date of agreement stamp duty value, date of registration stamp duty value is different. We have to take that agreement stamp duty value only if the following conditions are satisfied. Are you clear, ma? Yes. Next, we need to discuss about the section 51. Section 51, forfeiture of advance money received. So just I want to tell you one example. Mr. X is a seller, Mr. Y is a buyer. Yes, Mr. X wants to sell one property to the Mr. Y. Mr. Y is given the advance money to whom a seller. But due to ESMA failures on the part of the buyer, these negotiations are not resulting into the transfer. Because nothing but some issues happen in case of Mr. Y. That's why the negotiations are not resulting into the transfer. On failure on part of whom a buyer only. In this situation, so definitely whatever that advance money received by the seller, that isn't forfeited. That is nothing but what ma cancelled. Forfeiture of any advance money is there. Definitely that is an income to the transferor. So that is required to taxable under the head capital gain under section what ma 51. If any forfeiture of an advance money is there, definitely that is treated as an income and taxable under the head what ma capital gain. Okay. What is a tax treatment? How it will be taxable? Please remember. Yes, if any forfeiture is done before 1/4/2014, forfeited amount isn't reduced from the cost of acquisition. Forfeiture amount isn't reduced from the cost of acquisition. That means definitely in future you are going to transfer the asset. At that time, please reduce the forfeited amount from the cost of acquisition. Next, if any date of forfeiture is on or after 1/4/2014, on or after 1/4/2014, if any forfeiture is done, that forfeiture amount isn't directly taxable under the head income from other sources in the year of what ma forfeiture. Very, very important. The tax treatment related to forfeiture of an advance money. So if any forfeiture is done before 1/4/2014, that should be reduced from the cost of acquisition. If any forfeiture is done on or after 1/4/2014, it should be reduced from it should be directly taxable under the head income from other sources in the year of what ma forfeiture. Can you tell me? This is an amendment on 1/4/2014, prospective amendment or retrospective amendment? Prospective amendment ma. Before that, one treatment. After the date or on or after the date, we have another treatment. That's why. So this is only what ma forfeiture of an advance money received. Next, we have to discuss about the exemptions. We have an general exemption under section 10 subsection 37, and we have in what ma section 54 series exemptions. 54, 54B, 54D, 54EC, 54F. These are the exemption 54 series sections we have. So just I want to start with the section 10 subsection 37. Section 10 subsection 37 is an exemption of capital gain in case of compulsory acquisition of what ma urban agriculture land. Definitely urban agriculture land is nothing but capital asset, and compulsory acquisition is treated as transfer. Definitely we are required to calculate the capital gain, but here they are providing the exemption if the following conditions are satisfied. For whom this exemption will be available ma? For individual or HF. What is it capital asset ma? Urban agriculture land. Transfer under compulsory acquisition by the whom ma? Central government. Compulsory acquisition also must be done by the central government. Conditions, if the following conditions are satisfied, definitely whatever that capital gain is there, that is an exempt under section 10 subsection 37. That compensation should be received on or after 1/4/2004. Next, yes ma, the land has been used for that agriculture purpose for the 2 years before the transferring. Yes ma, that before the transfer that land must be used for that agriculture purpose by the, yes ma, SSC or by his family members also. That compensation fixed by the, yes ma, central government or Reserve Bank of India. In these cases, definitely that capital gain is nothing but what ma, directly exempt. If any urban agriculture land is nothing but compulsorily acquired by the central government, definitely they will give you the compensation. We have to calculate the capital gain, but capital gain is an exempt if all the following conditions are satisfied. Can you tell me how many years we have to use that asset before the date of transfer? 2 years for the agriculture purpose by SSC or by SSC family members also. This exemption is available only for that individual or HUF. Yes. Next we have to discuss about the section 54 series exemptions ma. Section 54 series exemptions always reinvestment based exemptions. I will tell you. Yes, I will tell you. Gross consideration minus transfer expenses, you can get net consideration. From that you have to reduce the cost of acquisition or indexed cost of acquisition, cost of improvement or indexed cost of improvement. Then you will get the what ma? Gross capital gain. If you are invested that gross capital gain, yes ma, as per the provisions of the act, definitely you can get the exemptions. If you are invested that gross capital gain as an investment, then you will get the what ma, some exemptions under the section 54, 54B, 54D, 54E, 54EC. Yes, some exemptions are there. Then finally you will get what ma? Net consideration. Okay, I will tell you one example. Section 54 series, directly I am starting with the what ma? Section 54 series, remember. So this section 54 is an applicable only for that individual or HF. I will tell you what is the reason. Because here we are transferring the one residential house property only held with the individual or HF. If the residential house property that is a long-term capital nature, that is a transfer, definitely we have a gross capital gain. Yes, if you are invested this gross capital gain in, purchase or construction of any other residential house property, automatically you will get the what ma? Exemption under section 54. Please remember what is a transferred asset here ma? Residential house property. If you are transferred that any residential house property, yes ma. Next, after that, if you haven't that what ma? Long-term capital asset in the nature of what ma? Residential house property, if you are transferred, if you any gross capital gain is there, that gross capital gain amount is invested in that what ma? Any other residential house property in the form of purchase or construction, you can get the exemption under section 54. Just example, yes ma, in Vijayawada we have a long-term capital residential house property. Yes, we are selling it for the 100 lakh. That indexed cost of acquisition directly we are taken as an 60 lakh. What is that gross long-term capital gain of 40 lakh? We are invested that 40 lakh. Out of that, how much amount we are invested in that residential house property in Hyderabad? 30 lakh is invested. Can you tell me what is that exemption you can get? My exemption is nothing but gross capital gain is 40 lakh or investment 30 lakh, whichever is lower 30 lakh only. So this is an exemption under section 54, 30 lakh. Finally, what is the net long-term capital gain 10 lakh. So that means you are reinvested the long-term capital gain amount in the any other residential house property for purchase or by purchase or construction basis. In this situation, you can get the exemption. Following points you should remember. Yes, SSE is an individual RHF. Nature of capital asset transferred is a long-term capital asset. Asset transferred is a residential house property. Usage condition, nothing but if you are keeping that house as an empty also before the transfer, no use, no issue. Next, mode of transfer, any mode. Yes, we are purchasing that. What is that asset ma? Residential house property. Can you tell me, is there any time limit for purchasing the asset ma? Yes. If you are purchasing that asset, yes, before the date of transfer 1 year, after the date of transfer 2 years, if you are purchasing anything also, the transfer date before also or after also, before 1 year, after 2 years also, if any asset is purchased, that is an eligible for exemption under section 54. After the transfer, construction related nothing but what 3 years time period they are given. Can you tell me? Can you tell me, very very important ma, if your gross long term capital gain is an up to 2 crores, yes, you can get the exemption for the 2 houses, but these 2 houses related exemption you can get only once in your lifetime. So suppose, yes ma, 180 lakh, that means 1.8 crore only my gross long term capital gain ma, can I invest in 2 houses? Yes, you can invest in these 2 houses and you can get the exemption also, but this benefit is nothing but available only once in lifetime. Example, yes, my long-term capital gain is nothing but 2.1 crore. Here you have an option to purchase only one house, ma. Here that is an 150 lakh you are purchased, 60 lakh another is purchased. Can you tell me that exemption is nothing but given only for one house? That is an option to the SSE. Obviously, SSE can choose that what ma 150 lakh only as an exemption. Amount of exemption, please remember this is an amendment ma. Exemption amount is in gross capital gain or eligible investment or 10 crores, whichever is what ma lower. Gross capital gain, eligible investment or 10 crores, whichever is lower, you can get it as an what ma exemption. So you can take this example, what is that ma 10 crore. Previously we are not restricting exemption amount with any amount ma, but here we are restricted with the what ma 10 crore. So please remember. Next, so please remember that point, section 54. If you are observing section 54, you are transferring the one long-term capital asset nature of what ma residential house property. If you are having that any gross capital gain amount, if you are investing that amount in the purchase or construction of any residential house property, can you tell me if the gross capital gain is less than 2 crore, you can invest in 2 houses. This benefit is available only once in lifetime. Yes, if the gross capital gain amount is more than 2 crores, definitely we can invest only in one house. Yes, if even though you are investing in one or more houses also, but we are giving that exemption only for that what ma one house. Can you tell me amount of exemption, gross capital gain or investment amount 10 crores, whichever is lower. Are you clear? This is only section 54. So what are the things you should remember? What is the transferred asset? What is the purchased asset? What is that exemption amount? That's enough. That's enough ma. Are you clear with the section 54 ma? Can you tell me how many exemptions we have ma? Section 54 is done. What is that section done ma? Section 54 done. Shall we start section 54b? Yes, we will start section 54b. Next section 54b. 54 done. Next we have to discuss about the what ma 54b. This exemption is also available for that individual or HF only. Can you tell me here any nature of asset ma, that is a long-term capital asset or short-term capital asset nature, whether whatever it may be, any long-term capital asset or short-term capital asset nature that isn't transferred. Can you tell me what is a transferred asset ma? Urban agriculture land. Definitely you are required to calculate the gross capital gain here. If you are investing some amount from the gross capital gain, if you are investing some amount from the gross capital gain in agriculture land, but here that agriculture land may be what ma urban or rural. So please remember, in section 54b, transferred asset is an agriculture land, that is an urban agriculture land. Purchased asset is nothing but what ma we can't construct the lands ma. So that's why here we are using that word as an what ma purchased. That may be rural as well as what ma urban. That may be rural as well as what ma urban. Yes. Here if you are observing that SC is an individual or HF, nature of asset transfer is a long-term capital asset or short-term capital asset. What is that asset transferred here ma? Urban agriculture land. What is the usage of asset transferred ma? It must be used for that agriculture purpose 2 years before the date of what ma transfer. So that urban agriculture land must be used for that what ma agriculture purpose before the date of what, before the transfer 2 years ma. Mode of transfer, any mode. Can you tell me what is that asset we are purchased ma? That means agriculture land, that may be urban as well as rural. Can you tell me purchasing time limit ma? 2 years from the date of what ma transfer. Amount of exemption here, gross capital gain or eligible investment, whichever is lower. There is no limit of what ma 10 crores etc etc. Yes, that's enough to do that what ma any problems also. The remaining things are not required for the discussion. Yes, can you tell me section 54, what is that transferred asset ma? 54, residential house property, that is a long-term capital asset. Can you tell me what is that investment asset ma? Residential house property that may be purchased or constructed. Under section 54b, can you tell me what is a transferred asset ma? Urban agriculture land. What is a purchased asset ma? Rural agriculture land or urban agriculture land. Are you clear ma? 54 and 54b is an over. Yes. Next we need to refer this section 54d. 54 done, 54b done. Next, we have to discuss the 54D section. Can you tell me 54D is an applicable for the any SSMA? 54 and 54B is an applicable for only individual or HUF. 54D is an applicable for any SSE who is transferring the long-term capital asset or short-term capital asset of an long-term, land and building of what ma industrial undertaking. So nothing but what ma, they are transferring the one land or building of an industrial undertaking. They are transferred. That nature of capital asset may be short-term capital asset or long-term capital asset. Okay. Next, whatever that gross capital gain arises from the transfer of land and building of industrial undertaking. In this situation, can you tell me the transfer mode is also here very important. Transfer mode is nothing but what ma, by way of compulsory acquisition. By way of what ma, compulsory acquisition. So nothing but previous two section 54 or 54B. If you are observing, transfer is under any mode ma, but here transfer under compulsory acquisition. By using the proceeds of an gross capital gain within the 3 years from the date of transfer. From the date of transfer within 3 years, if you are purchased or constructed, the land and the building of any other industrial undertaking, then you can take the exemption under section 54D. Once again, I am saying 54D is nothing but what transfer of long-term capital asset or short-term capital asset of land and building of one industrial undertaking. If you are getting that any gross capital gain, if you are invested within the 3 years from the date of transfer in another land and building of an another industrial undertaking, then you can take the exemption under section 54D. What is that condition we have to satisfy ma? Yes, before the 2 years from the date of that means what ma? Before the transfer 2 years, that must be used for the industrial undertaking purpose, that may be used as an owner as well as what ma tenant also. I am an owner, but I am not using the things. I am given as an what ma rental basis. I am giving this property as a rental basis to another person. That person also can be used for that industrial undertaking. That enough. So here 54D is nothing but transfer of land and building of one industrial undertaking and the acquisition, purchase or construction of what ma land and building of what ma another industrial undertaking, then we can take the exemption under section 54D. This is only the 54D ma. What is that amount of an exemption you can get ma? Amount of an exemption is nothing but gross capital gain or eligible investment, whichever is lower. Yes, this is only the discussion related to 54D. In every exemption section, you have to remember what is a transferred asset, what is a new asset we are acquired or constructed. That always you should remember. Yes. Next, 54 EC exemption. Can you tell me 54 EC is an applicable for any SSEMA? That may be individual HUF, AOP, BOI, HFP. All the SSEs can take the exemption under section 54 EC. Can you tell me here what is a transferred asset ma? Land and building. Nature of what ma? Long-term capital asset. If any gross capital gain arises from the transfer of that land and building, yes. If that long-term gross capital gain is investing in long-term specified bonds, if you are purchasing with the help of that gross capital gain long-term specified bonds, that may be NHAI, RECL bonds, National Highway Authorities of India, Rural Electrification Corporation Limited bonds, if you are purchased, then you can get that what ma 54 EC exemption. SSE, any SSE. Nature of asset transfer, long-term capital asset, asset transfer, land and building, usage of asset transfer, nil, mode of transfer, ma, any mode, asset purchased, yes, long-term specified bonds, that may be in that NHA bonds or RECL bonds, time limit, from the date of transfer within 6 months only you have to purchase these things ma. Then amount of an exemption is nothing but gross capital gain amount, eligible investment of 50 lakh, whichever is lower. Please remember 54 EC have a certain limit for that exemption. Gross capital gain amount. Yes, what is that gross capital gain amount? Investment amount or 50 lakh statutory limit. Whichever is lower only, we can take the exemption under section 54 EC. Are you clear ma? Yes. This is only facts regarding the 54 EC. Just I want to tell you long-term capital asset ma, and that is nothing but what ma? Residential house property we are selling. If that amount is invested in one or more residential house properties, then you will get the 54 exemption, because you are selling the long-term capital asset of residential house property and you are investing in the one or more residential house properties in India. One or more means nothing but gross capital gain is less than 2 crores. gross capital gain is less than 2 crores, then you can invest in two houses also. That benefit is available only once in your lifetime. Next, if same amount is invested in the NHAI bonds or RECL bonds, then you will get the exemption under section 54 EC. Then exemption under section 54 EC. Are you clear? Yes. Next, we have to discuss the 54F. Before going to the 54F, first of all, 54, selling of what ma, transfer of what ma, residential house property, and purchase of what ma, residential house property, or construction of residential house property. 54B, transfer of urban agricultural land and purchasing that what ma, any agricultural land. 54D, transfer of what ma, land and building of industrial undertaking under compulsory acquisition and purchase of what ma, any other land and building of what ma, another industrial undertaking. 54EC ma, transfer of what ma, long term capital asset of land and building. Out of that amount, we are invested in the long term specified bonds in the nature of what ma, NHAI as well as what ma, RECL bonds. Can you tell me what is that amount of exemption ma? 50 lakh. Next, we need to discuss about the 54F ma. Very important, last exemption ma. 54F. Next section, 54F. Yes, very important ma. This exemption is available only for that individual or HF. If he is transferring the any asset other than the what ma, residential house property. That is a long term capital nature of what ma, any asset other than residential house property. But all the sections having the gross consideration is nothing but what ma, we need to invest in any other asset. But here we need to invest it from the net consideration. Within that what ma, any one residential house property. If you are purchasing or constructing that what ma, any one residential house property by using that what ma, net consideration arising from the any asset other than residential house property by way of transferring ma. Yes, please remember ma, SSE is nothing but what ma, individual or HF. Nature of asset is a long term capital asset. What is that asset transferred ma? Any asset other than residential house property. So that may be land, building, gold, jewelry, etc. Yes, usage of any asset transfer nil. Mode of transfer, any mode. Asset purchased or constructed ma, one residential house property. Can you tell me time limit? Same as section 54. Please refer ma. Same as section 54. In section 54 also we need to invest in that what ma, purchase or construction of any residential house property. Here also the same asset, but what is that amount of an exemption? Please refer amount of an exemption. For that I am given the what ma, one example. So please refer in order to understand the what is that amount of an exemption we can get under section 54. Gross consideration is 100 lakh ma. Transfer expenses if you are removing, net consideration you can get. If you are investing in the total net consideration, then can you tell me how much amount is an exempt ma? Entire gross capital, gross long term capital gain is an exempt. Suppose this is an indexed cost of improvement or indexed cost of improvement as well as indexed cost of acquisition comes to how much amount ma? 60 lakhs. Just I am giving the total figure ma. So total how much amount ma? After removing the indexed cost of acquisition, indexed cost of improvement, can you tell me balancing amount ma? Gross long term capital gain 20 lakh. Here I want to tell you one thing. If you are invested the total net consideration, yes ma, then entire amount of this 20 lakh is exempt. Yes, I will tell you. In proportion to the net consideration only, you will get the exemption. Yes. So I will tell you 20 lakh is nothing but what ma, gross long term capital gain into investment divided by gross investment divided by net consideration. Investment always we need to check whether it is an proportionate to net consideration or not. So that's why I want to give you one formula. Gross capital gain into investment, can you tell me 80 lakh? Net consideration also 80 lakh. That's why this is 100%. 100% of gross capital gain will be exempt. If I am investing, can you tell me 60 lakh? 60 lakh, how much proportion to that 80 lakh ma? So that percentage of the gross capital gain will be exempt under section 54F ma. Exempt under section what ma? 54F. So please remember here we have to satisfy some additional conditions also. What are the some additional conditions ma? On the date of transfer of that long term capital asset, SSE should not own more than one residential house. That means at the time of transfer of this if at the time of transfer of what ma this resident any asset other than residential house property, or at the time of purchasing that what ma one residential house property, if you having one residential house property, okay, but you should not own more than one residential house property. If I am having the two residential house properties at the time of purchasing this asset ma, you can't get the exemption under section 54. If you having that any one residential house property at the time of transfer of what ma any asset, yes, you can get the exemption. That is only they are the given. You should not more than one residential house. One residential house, yes, you can hold, no issue. But you should not purchase or construct the any other house within the 2 years or 3 years from the date of transfer. If you are purchased any one house, that means already at the time of purchasing the new house, I have an already one house. Okay. But next within 2 years or 3 years from the date of transfer, you should not purchase or you should not construct any residential house. That is only the point. If you are not satisfied with the above conditions, definitely entire amount of the exempted capital gain. Can you tell me here what is that amount we are taken as an exemption ma 20 lakh? That exempted capital gain is taxable in the year of purchase or construction of what ma asset. Can you tell me here also that exemption will be restricted with the how much amount ma 10 crores only. So please remember here also that exemption under section 54F also, can you tell me restricted with the what ma 10 crores only. Please remember 54 and 54F is restricted with the what ma 10 crores. Please remember. Next, just I want to give you that one summary ma. Can you tell me individual or HF? Here individual or HF, here also individual or HF. We are transferring the gold ma long term capital asset and we are purchasing the one residential house property 54F ma. We are transferring the one residential house property, purchasing that another residential house property 54. Building is a long-term capital asset ma. We are purchasing the residential house property 54 and with the help of that long-term capital asset related capital gain, we are invested in NHAI bonds. We can get the exemption under section 54 EC. So in that entire exemption summary, you have to remember what is a transferred asset, what is a purchased asset. Based on that only we can decide that what are the exemptions we can get. What are the exemptions we can get? Are you clear ma up to now? Yes. Next we have to refer the tax rates related to capital gain. So simple ma, very easy. Yes. Remember first you have a short term capital gain. So if any short term capital gain on the listed equity shares, units of equity oriented mutual funds, units of business trust, the short term capital gain is an always taxable under 111A flat 15% ma. This is a special tax rate ma. So any short term capital gain, any other than any asset, that means other than these three, any asset that may be land, building or etc. on that, yes ma, we have to apply the other than 111A, that is using the normal tax rates ma. So short-term capital gain two types. Can you tell me if any short-term capital gain arises on listed equity shares, units of equity-oriented mutual funds, units of business trust, that is taxable at the rate of what ma 15% under 111A. If any short-term capital gain arises on any other asset, that is taxable under other than 111A by using that what ma normal tax rate. Next. Long-term capital gain. If any long-term capital gain on the listed equity shares, units of equity-oriented mutual funds, units of business trust, that is taxable under 112A flat 10%. What is the basic exemption limit ma 1 lakh? That means if you have an 1,50,000, 1 lakh is an exempt, 50,000 only taxable at the rate of what ma 10% without indexation. Any other asset taxable under section 112 ma, so flat 20% with indexation. With indexation. Next, specified securities are there. Important specified securities, listed securities other than units, zero coupon bonds. Listed securities other than units, because units are covered under section 112A. So that's why if any long-term specified securities, what are the specified securities ma? Listed equity shares other than units, zero coupon bonds, we have to pay the tax at an optional tax rate. Yes ma, without indexation 10%. Without indexation just 10% only. With indexation means capital gain amount may be reduced. That's why you have to pay the tax at the rate of what ma 20%. Students are confusing with regarding that what my optional tax rates related. That means optional rate. That means you have an option to pay the without indexation 10%, with indexation 20%. Facility is available only for the specified securities. In case if the specified securities are long term in nature, listed securities other than units, zero coupon bond. For these two only we have in what ma optional tax rates. Remaining all the things we have in what ma, yes sir, normal only. 111A other than 111A, 112 other than 112 other than, oh, sorry, 112 112A we have. And first for some specified securities we can follow that what ma optional tax rate. Are you clear? Yes. Next ma, we have in one concept of unexhausted basic exemption limit ma. Unexhausted basic exemption limit means I will tell you first of all. Balance basic exemption limit after deducting from the any other income. Just I want to tell you what is that basic exemption limit ma, normally 2,50,000. Normally 2,50,000. Okay. After adjusting from the yes ma, we have an other income is 1,50,000. We are adjusting that some basic exemption limit against this. Can you tell me how much basic exemption limit is exhausted here ma? 1,50,000. Here unexhausted basic exemption limit is how much ma? 1,50,000 is an exhausted. How much a basic exemption limit unexhausted amount ma? 1 lakh. So that unexhausted basic exemption limit, yes ma, it shall be deductible from long term capital gain 112A, short term capital gain 111A. This is an available for the resident individual or resident HUF only. Normally if you are observing, these are the special tax rate. You can't reduce that what my basic exemption limit from this special tax rate taxable income. But you can reduce the unexhausted basic exemption limit. I don't have any other income, that is an unexhausted basic exemption limit only. That can be adjusted against the what my special tax rate taxable income. So like an 112A, 112 or 111A. Against these incomes we can reduce. Finally, can you tell me 2,50,000 minus unexhausted basic exemption limit 1,50,000 is there. On that only we have to pay that what ma tax. So this is only the concept of unadjusted basic exemption limit. Please remember, whatever the basic exemption limit is and balance after adjusting against the other income, it can be used for the yes ma long term capital gain under 112A, short term capital gain under 111A. Are you clear ma up to now? Yes. So directly we need to do the what ma some problems. Directly we need to do some problems related to what ma capital gains. Sir, basic problems only they can give you in an examination. Don't think too much about the problems. Direct problems, sir. If you know the format, directly you can do the questions. I'm not talking about the CA examination ma. I'm talking about the CMA examinations only. If you know the concept of the format, whether it is a depreciable capital asset or non-depreciable capital asset, you have to identify how to apply that indexation. In case of immovable property, how to apply section 50C, consideration in case of transfer of immovable property. If any forfeiture of an advance is there, what is the tax treatment? And if any exemption related points are there, how to identify that exemption and what is the amount of an exemption you can get. All the things you have to analyze. Just if you know the concept, directly you can do the problems ma. Okay. Shall we do the problems ma? Yes, we can do the problems ma. Just. So in our workbook illustration 27, we will discuss directly ma. Yes, just open the illustration 27. Sri Charan, resident, he sold some assets, okay, during the previous year 23-24. So can you tell me what are that asset he sold ma? Land as well as jewelry. Cost of acquisition they are the given. So that means at the time of purchase, what is that amount he paid? Sale consideration they are the given. And what is that year of acquisition also they are the given ma. Okay. Note, cost inflation indexation factors. Can you tell me? So this asset is purchased in 2008-9 and sold during the 23-24. Definitely this is a long-term capital asset. This is also what long-term capital asset. So if there is a long-term capital asset is there, definitely we have to find out the indexed cost of acquisition. That's why they are given the indexation factors. Okay. He's transferring the long-term land, long-term jewelry. Okay. In March 2024. In March 2024, that means after the transfer, he purchased the one residential house Delhi For 80 lakh self occupation, even though he having that one residential house that is self occupied since 1st April 2014. I think you know, here transferred asset is any asset other than residential house property, and we are purchased one residential house property, so that's why we can get the section 54F exemption. I think you know, at the time of transferring that assets, or at the time of acquisition of what ma any residential house, at the time you can hold the what ma one house. If you are holding that more than one house, you can't get the exemption, but here we are getting that only one house. So they are asking that what ma computation of capital gain. Just yes, shall we compute that capital gain first ma? Here we haven't is we are sold two assets ma. That's why first to compute that capital gain, yes ma, land related. Can you tell me what is the sale consideration? What is the sale consideration ma? So please take 1 CR. 100 lakh means 1 CR. Yes, indexed cost of acquisition. Can you tell me what ma? So 20 lakh into CII in the year of transfer 348 divided by year of acquisition 2008-9. Can you tell me 2008-9 ma? 137. Finally, you will get what ma? That is nothing but 50 lakh 80,292. So this is only the long term capital gain on land. Next, we have to identify the long term capital gain ESMA on the sale of jewelry. Can you tell me what is the sale consideration? 1 crore 80 lakh minus we have to reduce the cost of acquisition or indexed ma, indexed because it is a long term. Yes ma, I think they are given the cost of acquisition 40 lakh, cost inflation index in the year of transfer 348 divided by yes ma 2023, that is in 105 divided by 105. If you are calculated, that is in 1 crore 32 lakh 1 crore 32 lakh 57,143. Yes, this is an B amount. Yes ma, total long term capital gain. Can you tell me A plus B total long term capital gain? Yes ma, how much it will be ma? 96 lakh 62,565. Can you tell me? Yes, I think you know 54 exemption is nothing but gross long-term capital gain amount into investment divided by net consideration. Can you tell me what is the net consideration ma? 280 lakh. So what is the net consideration ma? 280 lakh. This is an 100 lakh. Yes ma. Next this is an what ma? 180 lakh. Can you tell me 280 lakh? If you are calculated, this is only exemption you can get under section 54F. I think you know formula for calculating the section 54F exemption. What is that ma? 96 lakh 62,565. This is an gross long term capital gain into investment divided by net consideration. Sir, what if I am invested the total 2,80,000 ma? Total 2,80,000 if you are invested, then amount of an exemption will be equal to 96,62,565. After removing that exemption, whatever the taxable long-term capital gain is there, that is only the answer. This isn't given for 8 marks, sir. This is a question given for that 8 marks. I want to give you that few more questions also, ma. I want to give you that few more questions also. Yes, question number 23. This is given for that I think 5 marks. Dhoni sold one residential building at Cochin for 65 lakh. Yes, ma. In December 2023. In December 2023. The Stamp Valuation Authority determined that value 80 lakh, which not contested by the Dhoni. So nothing but actual consideration is 65 lakh ma. Stamp duty value is nothing but what ma? 80 lakh. Okay. The property acquired in 2010, that means nothing but we are acquired that property for that 6 lakhs only. We are acquired, that means after that after that ESMA selling of what ma residential building at Cochin, we are purchased the another ESMA at an 55 lakh one house and another house for 25 lakh before March 2024 itself. They are asking the computation of capital gain. Can you tell me, here we are selling the one residential house property and purchasing the two residential house properties, so that's why you can get the section 54 exemption. But here you have to apply ESMA whether it is a long term capital gain or short term capital gain ma. Long term capital gain, how you can identify whether it is a long term or short term ma? Simple, here 2010, that is a date of acquisition, transfer is nothing but what ma? December 2023. Okay, But what is that consideration ma? 110% of actual consideration. Please check it out ma. 65 lakh into 110% if you are observing that, that is compared with the what ma 80 lakh. So definitely if you are observing that this is still less than the what ma stamp duty value. So that's why here we have to apply the section 50C, transfer of an yes ma land or building, it being an immobile, being a capital asset, yes ma, if actual consideration, no, 110% of actual consideration still less than the stamp duty value, then we have to take the consideration as an stamp duty value. By using this point only we can do the problem. Next ma, can you tell me what is that indexation ma? 348 is nothing but present year, 2010 11 is 167. If you are removing the indexed cost of acquisition, this is only that what ma, this is only what ma gross capital gain. Here the gross capital gain amount is less than 2 crores or more than 2 crores, less than 2 crores only. That's why you can get the two houses as an exemption. Can you tell me 55 lakh plus 55 lakh plus 25 lakh is there, but here we haven't only how much amount ma 67 lakh. That's why entire amount is an exempt. I think you know gross capital gain or eligible investment, whichever is lower. Eligible investment nearly 80 lakh is there, but gross capital gain is 67 lakh only. So that's why entire amount you can take it as an what ma exemption. But you have to write the note points for the what ma 50C. So here 50C note point, you have to write it down, and you can get that exemption for the two houses. This is also you need to write it down. All the points you need to mention properly. This type of questions only they are giving in the examination ma. In your study material maybe some questions having that voluminous also, that is not required for that exam preparation, but this type of questions only important for an exam. So this is an MTP question. Just we need to check it out. These type of questions only they are giving. Don't waste your time by way of preparing unnecessary questions ma. Just okay. Madhusudan is an SSC. He sold that what ma following capital asset. Okay. One asset is a debenture, another asset is a gold, another asset is nothing but what ma building. Another asset is nothing but what ma building. Can you tell me sale proceeds they are the given, cost of acquisition they are the given, and nothing but what ma date of acquisition also they are the given, and fair market value also given. Can you tell me the fair market value is an irrelevant here? Why? Because all the asset we are purchased after one on or after 1/4/2001 only. If any asset is purchased before 1/4/2001, then only we have to apply the FMB benefit as on 1/4/2001. Here we have to calculate the capital gain. First of all, this is purchased in 2005. This is also purchased in 2005. This is also this is purchased in 2008. So all the assets are long term only. All the assets are what ma long term capital asset only. But please remember, on debentures we can't get the indexation. That is only key point here. On the debentures we can't get that what ma indexation. So please try to calculate that long capital gain, long-term capital gain on debentures, but without indexation. Please calculate long-term capital gain on the gold and long-term capital gain on building. Just you have to apply that indexation. All years related cost inflation indexation factors also they are given. And after calculating the capital gain, maybe in some cases you may get the capital loss. Total the all the things. So long-term capital gain, total all the things. In addition to that, they are given the business income. Please calculate the total income. That means capital gain income as well as what ma? Capital gain income as well as what ma? Business income if you are added, then automatically you will get the what ma? Total income. This type of questions they are given for the 7 marks ma. One more MTP question ma. Sunil owns one commercial building in Kolkata which is an acquired. That is, this is an I think last year MTP. So that's why years are nothing but what ma 1 year last years only we have in this question. Just remember the concept just enough. So he acquired the 4 lakh asset in the 1996 and 97. Obviously we are acquired that one asset before 1/4/2001. Definitely they will give you that what ma 1/4/2001 values. So a fair market value as on 1/4/2001. Can you tell me what is that? Cost of acquisition we have to take ma whichever is higher, that is in 16 lakh. He sold in the previous year, that is in 320 lakh is an actual consideration ma. And here that is in building immobile property. That's why we have to compare with the what ma 360 lakh, that is in stamp duty value. Can you tell me 110% of actual consideration? Yes, I am using the calci. Yes, 320 into 110%. Can you tell me what ma 352 lakh? So that means what ma 110% of actual consideration, that is nothing but what ma still less than the what ma stamp duty value. So that's why, what is that? The consideration we have to take for the purpose. That means 352 lakh is there. If we are applying that 10% of actual consideration, still that is a less than stamp duty value. That's why you have to take that consideration as an SDV only. He paid the 3% of sale consideration as a brokerage. That's why this is a transfer expenses, ma. 3% of sale consideration means how much, ma? 3% of 320 lakh. Inflow, maybe students can apply. Yes, ma. Gross consideration is nothing but 360 lakh. Transfer expenses also they are tempted to calculate on 360. That is wrong. Here on the sale consideration is nothing but what, ma? 3% means sale consideration is 320 lakh. So on that only you have to apply. Next, can you tell me, we are selling the one residential house property and we are, yes ma, acquiring that what ma, another residential house property. That's why you can get the section 54 exemption. So simply you can do all the things and you have to apply that indexation also. Can you tell me how to apply that indexation, ma? Cost inflation indexation factors are given. So this is the last year question, ma. That's why you have in these years, nothing but what, ma, last previous year and last assessment years we have. But do it these type of questions only as in practice. Yes, simply if you know that concepts. Very, very important thing. 50C you should remember. Transfer expenses concept you should know. If any asset is an acquired from the previous owner, previous asset holding period we have to take, as well as previous year, previous owner holding period also we have to take, cost also to the previous owner. So that point you should remember. And in some cases we can't get the indexation. That also you should remember. Are you clear, ma, up to now? Are you clear? Yes. I want to take you one more problem in the, yes ma, in our workbook. I want to take the one more problem in our workbook. Yes. Yes. Yes ma. So Chirag is an individual purchased the 5,000 shares of X Limited 50 per share and 4,000 shares of what ma, Y Limited 60 per share. In the previous year 15-16 held them as an what ma, capital asset. Right now you're having that shares of X Limited and shares of Y Limited as an capital asset. Please remember. Okay. During the previous year 2021, he converted that all the things that capital asset into what ma, stock in trade. He converted that all the capital assets into what ma, stock in trade. So can you tell me in which year we are purchased, ma? 2015-16 we are purchased, but in the 2020-21 we are converted that capital asset into what ma, stock in trade. Next, if you are observing that, yes ma, as on the date of conversion, what is the fair market value, ma? Each and every share value is nothing but 300 per share. So both the company shares is nothing but what ma, 300 per share. Okay. Previous year 23-24 we are selling the total stock in trade because at the time of purchase these are the capital asset, but right now that capital assets are converted into stock in trade. Stock in trade is on sold at the rate of what ma, 380 per share. So right now we have to calculate the capital gain as well as the business income in the year of sale of stock in trade. So nothing but, yes, please observe. Capital gain first you have to compute. Can you tell me capital gain we have to compute? Can you tell me what is that? Yes ma, sale consideration ma, fair market value as on the date of conversion. Can you tell me what ma, 300? That means nothing but what ma, 9,000 shares. That means 4,000, 5,000 shares of X Limited, 4,000 shares of Y Limited, 9,000 into 300, that is on 27 lakh. Minus we have to take the indexed cost of acquisition. Can you tell me how to take that indexed cost of acquisition, ma? First of all, 5,000 into 50 is nothing but cost of acquisition in case of what ma, X Limited. Next, 4,000 into 60 is an cost of acquisition. 4,000 into 60. So on this we have to apply that indexation. Yes ma, 301. Please remember here transfer year is, yes ma, 2021. This is only the transfer year. That's why transfer year CII we have to take in the numerator. Can you tell me what ma, 301 divided by what ma, 254. Then you can get the indexed cost of acquisition. Then you will get the capital gain, that is on 21 lakh 19,331. Next, we have to calculate the business income also. Can you tell me business income means 9,000 shares we are selling it for the 380 rupees. 9,000 into 380, that is in 34 lakh 20,000. But what is the cost ma? Whatever the fair market value are taken at the time of calculation of capital gain, that is only the cost, 7 lakh 20,000 only, nothing but what ma? Business income. I am expecting this type of questions in that examination. This is section 45 subsection 2 question ma, conversion of capital asset into stock in trade. So please refer this type of questions in that before going to that examinations ma. So please refer the first capital asset definition, transfer just definition, next nature of capital asset, whether it is a long term or short term, period of holding concept, next indexation concept, so next cost of acquisition concept, next just refer the what my tax rates, next exemptions, next forfeiture of advance money, 50C section, and slum sale concept. Please refer these things. Definitely you can get that what ma full marks in the capital gain chapter. Are you clear ma up to now? Yes.